You got 5 more minutes. Jamming. Oh, I'm jamming. We got Pepsi out today. Before the market. Pepsi, PEP. People gotta have their Pepsi and Coke. I can't stand it. We're up on it. Spot got earnings before the market. The revenue rises, second quarter outlook issued. So they opened up second quarter. Magnificent 7 earnings. Soars on earnings beat. Why profit matters more than miss on user. What? So we got a shoulder line. Triple top at 313. Good morning, Mike. The bell rings. Mr. Down 17. Apple UAL had a good run. Could pull back some. You got WFC double top. AMD got a break to 63. Okie dokie. Got a double top on Netflix. Well, that ain't Netflix. Damn it. Big volume spike on Netflix this morning. God darn it. Good morning, franchise. SPX at a shoulder line. SPX at a shoulder line. Look at the puts. Not all convinced about this market. What is this? SPX put, double top, or head shoulder line. The 50-20s. We got the 9. We got a double, okay, down to the 9. Down to the 9. Down to the 9. These are the 50-20s. I'm up 100. Now, got a hammer reversal. Come on, drop. I'm still in it at 7, the 50-20s. It's starting to look a little bullish. AMD pulled back to support at 150.39. We've got resistance to break on the IWM. $195.60. You got a symmetrical flag on the QQQ. Meta popping. Meta broke resistance. Randy talked about GUR. It's off the 9 today. Yeah, I mentioned JP Morgan yesterday. Pot stocks are moving a little bit. Double top on the SPY. Double top on the SPY. What do I guys think of Tesla? They've just been picking on Tesla right and left. They don't know when to stop. I think it's going to be a good buy around 120. Right now we got a snake breakout. So if we hold 140.37, SPY new high. Double top on the QQQ. Ding, SPX. Go, baby. It's at 560 now. See the double top. I got out of them earlier. Double top. SMCI moving. Busted past resistance. We had a pretty good shakeout the other day. Boeing down another 53. Oh boy. Yeah. Netflix bearish. Apple pulling back some. Netflix at the beef up. The market pulled too much of a forward outlook. That was the other day. Oh, that's all. SMCI, new high. Tesla moving up a little bit. Mara, good job, Mike. $503.94 is what I got for the SPY. $504.73. Oh. We got 1, 2, 3 on SPX here. We could start dropping down. We got the 51 for the next support on the SPX. And the VWAP for the SPY, if that doesn't hold, we'll get down to a double bottom at the 200. We have a 1, 2, 3 top and a 1, 2, 3 bottom with a lower high. Met a new high. Netflix reversed a little bit, bounced off the VWAP with a higher high off a double top. JP Morgan. Oh boy. JP Morgan. JP Morgan broke the 200. So that will be your new support. Meta new high. SPX flying. Yep. It's kind of hard to. I'm being quiet, that's for sure. Calm before the storm, I think. My guide, I mean, my problem is, I hate to say it, but some of the noise in the room is bothering some of the people. When I get here and argue on CNBC or. So I don't know what to do anymore. I like listening to things when I'm trading. I'm going to silent, I can't trade. I just can't get it done. I mean, I can get into this real well. I really get into it, and then when I put a chokehold on it, I just kind of go blank. So I have to physically, mentally kind of dive in there and swim with it. And if I'm not swimming along with these fat cats or a scanner, or I just kind of go numb. Plus, I'm not feeling very good here this week. The laser took a big hit. Here's another one that I used to trade. Fubo. I mean, look at that. That one's down huge. A lot of these bottom plays are looking good. Stem. I used to trade this back during the Obama years. 20. Well, what'd they do to it here? They've done something, because this ain't going back 20 years. Unless it's a new company. Huh. Do 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 do.
profile study near like 86 or so, 87, around that area. So we can see as well, I'm kind of counterpoint is that if we were to push above this resistance to generate the bullish signal in the RSI and invalidate that downward trend line.
Okay, and so the head and shoulders, you can have that lopsided. It's like
Yeah.
that head and shoulders.
Yeah, I mean, it's a lot of this stuff, a lot of these patterns here, you know, they're more loose, they're more subjective.
Why does it look so
But
weird?
The general shape that you're
Oh,
looking
I know
for,
why.
the rise-
Two looks pretty well established there.
Yeah, I mean, you're if you're looking for these things to fit the textbook example every single time, you're probably not going to find too many patterns. But yeah, that's a good observation. Yeah, one shoulder can be a little higher.
All right, not everybody has to be perfect.
Yeah.
Right? Okay. Jenny, last one. Let's talk visa again. I think for this one is like it takes some major cataclysmic event in the economy to break their business model.
I would agree with that, especially because everything we hear is the resiliency of the consumer, the labor force remains strong. I mean, all of this should say, hey, Visa setting up for a great quarter. And I know that we've broken down slightly from highs, which I think actually makes it only better as we go into earnings, because it's not like we're at all-time highs that we once were. I mean, we're off of all-time highs by about 6% here. So what we know from their last quarter is they were able to post really strong net revenues, increasing about 9% year over year, better than expected top-line growth and bottom line, while payments volume was up 8%. This was also followed by a 16% jump in their cross-border volume and a 9% improvement in their processed transactions. So for this quarter, analysts are expecting a lot of the same. I mean, they're still expecting to grow
19th.
from last year. Amid the current financial backdrop, too, they've shown gains of about 25% from levels of around 220 in early January of 2021 to down
Netflix
trading at
up.
just over around 274 here. So while we have seen in this name consistently outperform the S&P 500, I also think that it's been a volatile space as far as like financials and overall banking, and they've been able to weather it quite well. I know we underperformed in 2021, but hey, Visa is pretty much at its all-time highs. That's not the same you can say for so many of these other companies. The only one that's actually very close to it is MasterCard. So I think that Stu's expecting, it would have to take some major like guidance cloud, like something disastrous is going on for this to be shaken, frankly, especially because we've been pulling back as of late.
The other thing too is that a lot of the payment disruptors, as they are labeled, Square and PayPal and stuff, all of their tech attachments and kind of more speculative utilities have led them to be underperformers, whereas the classic just swipe, collect fee model and ease of transaction that Visa and MasterCard offer.
Yeah.
Let's be real, like people are trying to push crypto stuff and whatnot, and like at the end of the day, Visa, MasterCard are the way to go, and the stocks have been very resilient because of that. Is this sell-off since the highs, Rick, any trouble at all for the trend?
A little bit. And we can see that it's actually kind of a similar read to our last chart where we hit our highs and then we crossed below, our two moving averages that we follow, our yellow 21-day and orange 63-day, and they're right on top of each other. So we have kind of a similar situation where the moving averages are pointing downward now and price has closed below them, and we've got a cluster of them, so it gives us a convenient resistance point to watch here. So we can see once again as well, momentum has been trending down for a while. We had some pretty notable bearish divergence heading into those 52-week highs, and it did play out to the downside eventually here. You know, the problem with bearish divergence is there's no stopwatch that tells you exactly when the downtrend is going to happen, if it does indeed happen at all. So you can be waiting a while, you can be stuck, you know, waiting for a move that may not come. In this case, it did come to the downside though, and the important thing to note about bearish divergence is what it's telling you in general is that the pace of the gains is slowing down. Does that mean it's going to lead to a consolidation phase or a decline or whatever? You don't know that, but the point is that the momentum is slowing, and that's what the useful thing you can glean from that is. Now momentum is more in the hands of the bears. We'd want to push above that 50 midline for the bulls here, and if that were to happen concurrently with our break above resistance, that would be a nicer setup for the bulls here because we would also be breaking out of this short-term downward channel. Then we would want to cross above 278, this red line here. We had some highs around that point a few times. Also lines up with another volume node here. So those were the clear areas to be looking for a breakthrough to the upside here. If we were to move lower, we had some highs and some subsequent lows around the same area near like 265.
This is a tougher one to figure out what the approach is going into earnings, to be honest. You know, like I said in our first chart there, it seemed like there was so much working against Texas on the short term and the long term. For Visa, you've got this long-term trend that it seems at any moment could kind of kick in, especially as the stock tries to reclaim your moving average here, your kind of midterm moving average going into the earnings, which is an actual nice attempt to get out of the doghouse as far as the momentum goes.
Yep, that's one other observation. Actually, it's pretty highly correlated to the S&P 500. It's a kind of a similar chart over the past 6 months. You can see that we had this situation where we just were rising upward and then we had a drop off here. So I actually checked the correlation before this. They're pretty highly correlated.
Okay, so maybe just kind of a broader stock trade in the moment then, as opposed to trying to expect some big thing on earnings. I think it does make sense given the correlation to the economy. Thanks, Rick Ducat and Jenny Horn. All right, those are
Yep, I missed the scanner too.
Our developing story next is another stock on earnings, but it got jammed up. That's right, jam. Get it? Xerox. Stock's down pretty big. Give you the update ahead of our market meetup next. We got to talk in the charge. Pretty much as we outlined when those numbers came in soft. Manufacturing figures lower than expectations, so bonds rally. The Russell leads a bounce. It's risk on now across the board this morning.
Risk on across the board this morning. So they forgot about last week.
I remember when I first started.
Oh, honey.
And we would experience turbulence.
The only reason we had turbulence is because you cheated on me with the pilot. Oh, yeah. NVIDIA up and Netflix showing a bearish trend. Good, according to my alerts. Well, you get a second chance. Guess we got Visa earnings coming up. That's a respectable run right there to what we've been seeing. Had many corrections on the way up, and then this big one, so she should bounce off earnings, maybe. Netflix a monster today.
Well, manufacturing has been in a decline or in recessionary territory for the last 19 months. So you want to see that actually coming back here a little bit, and then seeing services, which is 70% of our economy, actually contract. I think that would have a little bit more of a weight for the Fed to be able to
Yes, I agree.
move rates to the downside here in the near term.
There's many traders that, well, we know what CNBC did to us. They sold at the highs and then they kept pumping the market. And then finally came out last week and mentioned, oh, I'm 90% cash. But the momentum in this market is hard to judge. I mean, they can come in here today or tomorrow, this week, and forget about everything that's happened in the past. They'll try not to mention it, and it's Boeing down again. From the bond market, yeah. That's what they said yesterday. That one guy said he watches the bonds. Humana's at the 200 on the 1 minute. I'm just not into trading that much. Ah, darn, look at that aluminum. Man, I wanted to get this so bad. I mean, that's a pretty good sell-off. 116 from 148 in a few months with a lot of volatility. I don't know about that. JP Morgan. Even yesterday would have been good. JP Morgan Chase opens the doors for a new Glasgow office. The firm employer in Glasgow with 2,600 employees in the city, and 4,000 in Scotland. I got 507331 for my next resistance on the SPX. We got a rising wedge on the day, interday. Let it snow. God. The U.S. is preparing $1 billion in weapons package for Ukraine once the bill is passed. Look. Okay, here's pullback. We just now dropped below support. Not really, but I mean, we're still at support. 504.33. Okay, we're at the SPX, just breached the 51. I think that's the 51. Yeah, EMA.
You could argue, I guess, that maybe they're stealing some of that prized market share from Tesla. But hey, in a letter to shareholders, their CEO, Mary Barra, did note that they're seeing really good sales momentum as far as their EVs, like their Cadillac Lyriq, which benefits from these scale, material costs, and mix improvements. They also did say they're benefiting from these lower EV costs. Well, the cost of battery cells came down significantly as their Altium Cells joint venture plant in Ohio did start ramping up its production. They also saw overall better than expected first quarter earnings. They increased their profit outlook for the full year and said the cost of batteries for their EVs will continue to drop, actually, not just this quarter, but going forward.
GM.
They saw a 21% increase in their retail deliveries for EVs. Well, overall, on an unadjusted basis, we did see earnings beat as well as an adjusted basis. So revenue rose 8%. Automotive revenue came in up 7%. I mean, this was a strong...
I've always had this feeling that General Motors numbers were always fuzzy. Out of all the companies that I've ever traded, I never could be able to trust their numbers.
They've given any sort of consistency or reliability in overall government contracts. And
that's why it's never really broke out.
Be a huge beneficiary, and they did beat on earnings, and they were able to reaffirm their outlook. But not seeing that reflected in their price. So overall, first quarter sales and earnings came in strong. I mean, we saw sales rise some 14% year over year. The calendar year also did help some. The first quarter of 2024 did include 13 weeks of results. Last quarter, it only included 12. So the comparable year over year growth rate was still, though, 5% to their credit. Growth looked solid. They said they continue to develop 21st century security solutions as well as integrated deterrence for customers around the world. These first quarter initiatives reinforced their confidence going forward. While financial guidance didn't change particularly, they did say that earnings should come in between $25.65 and $25.35 a share. Sales also expected to remain relatively in line with previous targets, and free cash flow looks healthy. So maybe at least the stability or the lack of surprise of their results was what isn't moving markets so much, because I will say that this was, as far as like a beat on expectations, Lockheed Martin was definitely able to do so.
All right, good to see you, Jenny Horn. Thank you for all of that. Appreciate it. In the thick of earnings season, we are. So many names to watch this week. In the meantime, I want to get some insights on the news shaping the markets. Peter Tuckman is with me.
We have never
Equity floor broker
ending
at
source of
Fremont. Nice to
aggravation
see
from
you.
our government. Yep, that's true.
Yeah, right. Things are feeling pretty good. You have first back-to-back gains maybe for the S&P in April, because we haven't been used to
What was
that
that?
lately. How are you feeling? Because last week a tough week, right? And now you have 2 days,
Oh.
which is impressive. And there were a lot
It's
of
him.
folks who thought that maybe the market was, testing oversold, or maybe the Mag 7 would give a little boost. What are your thoughts?
I think it's important for us to really analyze what happened. We had this spectacular first quarter, right? Best first quarter since 2019. And then obviously, look, markets can digest one or two bits of information, but when you've got a lot thrown at it, you've got the interest rate story, you've got the inflation story, you've got Jay Powell, you've got a lot of dissent amongst all the Fed governors, you've got a war going on with Russia and Ukraine, which we're talking about in Congress, and then you obviously have the heat of the Middle East crisis, which affects obviously all of us, but also affects oil, the commodities, the delivery of oil and whatnot. So all that together for me created a perfect storm. We came into April where you should have seen a bit of a fresh money coming into the market.
Yeah.
We hit a little bit of resistance, right? It was definitely felt a little frothy and overbought coming after that first quarter. Then all this information, all this fear around the interest rate cut story, right? Markets can handle what markets don't like are being given expectations and then them not being fulfilled. We had been talking about 3 interest rate cuts already, which I thought was completely premature because we're not.
Powell never said 3 rate cuts, buddy. You all said it.
Pay much attention to it. Then you have 2 of the other governors who said, you know what? 3 cuts, maybe not 2 cuts, maybe 1 cut, maybe no cuts. Then all this, we're speaking out of 2 sides of our mouth. Then you've got the war going on in the Middle East, which was a huge thing. Obviously, the market sold off really hard overnight around the Iran attack and then the Israeli response and whatnot. So you had 3 weeks in April where there was a perfect storm going on and the market just really took a breather. Now, it kind of felt like, wow, are we now in bearish territory? Is this going to be a prolonged sell-off and whatnot? And look, 1 day does not make a market. 1 week does not make a market. Just as this 2-day rebound,
Right.
I don't know if that's going to follow through. Is the selling over? The sellers felt like they were getting tired over the last couple of days.
Yeah.
So it's really nice to
You
see
got a double
nice
bottom on
rebound.
Walmart.
How long that stays, I'm not sure.
You don't sit on the sidelines, though. You don't sit on cash all year long or something like that. I mean, you put money to work, right?
You know
How
what?
do you
Look,
do that?
you know what? It's interesting. I thought it felt like this was a buying opportunity, this sell-off. When you see it happen so fast and furiously, think about it. It was a barely percentage sell-off. So you saw crypto, Bitcoin get down into the 63 level. Obviously, gold coming off its highs. Look, also the Mag 7, right? People who did not want to pay $960 for Nvidia a few weeks ago were able to get it in the 700s.
Yeah.
Well, so everything is on sale. Why would you not have a shopping list together, right? When markets do this, everybody should look. And I'm not.
I've said that.
But from a long-term investing potential, a position, right? When things go on sale, that's a time to start chipping away at them. That's what the market gave you now. It was nothing more, in my opinion, than. I don't know if it's over.
This is what I've been saying. for the longest time is to have a top 10 watch list of your 10 favorite tickers. Then when we go through a period of downturn like what we have right now, just like you said, could be a good opportunity to make a lot of money real fast. But you got to have your top 10 stocks that you've made money on, and always have volume and always have cash. And when you have such a good sell-off like we've had. I've got that watch list of my favorites. VIX at 1633. Go get me
He
some
said, I'm eating while everyone else
tea
is
going. I'll be
running
right
for
back.
the hills, I'm eating popcorn. I'm bullish on the market. So
Right,
that gave me a
right.
bit of confidence
Yeah.
that this was a short-term sell-off and that he's net bullish, and that's where I'm going to go with my opinion.
Yeah, and look, he's done great with a lot of his calls, no doubt.
Right, and the Tesla story is one more about
Right.
Mr. Elon Musk than anything else, I think. Obviously, the company is going through headwinds, but it's
Yeah.
he's such a wild card in the game, right? The Mag 7 definitely came off its highs, and those are buying opportunities.
Dan Ives still has a $300 target on Tesla.
Yeah.
I mean, he's still holding his target there, though some have been lowering their targets. You and I were just talking about a recent article, and I heard some buzz about this, the trading hours.
Right.
For as long as we've been here, that bell rings at 9:30 and 4 o'clock. Opening bell, closing bell. We love it. We know what it is.
Yeah.
And now we're hearing 24/7 trading.
You know,
Did you hear this? And what would
in
this
fact,
mean?
my face was on the Financial Times story about it, so that's why somebody posted it.
So you must
and
know
sent it
everything.
to me. I don't know anything about it. You know what?
Would it work? Would the concept work?
I don't think so. Look, we do have, obviously, there is trading 24/7 on the S&P, right, and whatnot. So you have access to the markets if you want them 24/7. Should we compromise what we do down here to live up to that? I don't think so. Opening bell,
opening
closing bell
bell
are huge. They've been that way for 100+ years.
That's where the market volume is here, no
100%,
doubt, because
exactly.
we've lost market share. I mean, it's fair to say that.
Correct.
But opening bell and closing bell are very busy.
Correct.
Opening bell is viewed by over 25 million people. That's how, at least in part, NYSE gets companies to come list here.
Also, the volume that we see on the opening and the close is where a lot of the big guys embed their positions because they don't want to impact the market so much.
I don't
Right,
know why
that's an
they,
important thing.
the report says that the NYSE is gauging interest in that. This 24/7.
Let's hope
I
it's
don't
just
know.
gauging interest.
So you don't think it, like, you just don't understand how it would work.
It's a really fresh story. I don't understand how that would work. That would really kind of make this place obsolete in so many ways. I don't get it. Opening bell, closing bell. We're not closing this place down. They've invested a lot of money
Right.
in making this the
And having the hybrid model of humans and computers has been the recipe.
and it's worked
Has been the
beautifully.
winning recipe.
Correct. 100%.
I wonder if the
So
computers
let's
will do
forget
the
about it.
trading overnight. And
But they already do. You can trade
Yeah.
SPY 24/7.
Yeah.
We don't need to throw a wrench in that story. Let's not even engage it.
Okay, we'll leave it there for now.
They're
And
engaging
happy
it. We're not
Passover.
engaging it.
And Tuck, I wanted to wish you and your
Thank you
family
so
and
much.
all of our friends
Everybody,
who are
happy Passover.
celebrating a happy
It's not
Passover.
not a great happy Passover. Let's hope for better times.
Indeed, but many blessings for folks, I hope. Thank you, Peter Tuckman, Trade Moz. Thank you. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the technicals. Tom O'Brien takes us through his trades. Home Depot, Agrico Eagle, and AMD. Next here on Trading 360 on Schwab Network. Don't miss it.
My dad was a hard worker.
He was a hard
He used
worker.
to do side jobs, installing
He
windows.
taught me how to work 9 to 5. Then after we got done with work, we always went down to the fishing hole, and we caught fish. Your dad could fish too. There's me right there. No, that's you, Johnny. Fray, F-R. Always clean as Jim. May I help you? I'm all right. How about you?
Great. I'm with American Benefits, so based on the records, I'm sure that you may qualify for state-regulated final expense life insurance plan. That's going to cover all of your funeral and burial expenses. So I have insurance consultants on the line who will patch you with the
You talking about me dying already? God. Funeral expenses? Not a bad run, LNTNA. Well, these penny stocks are reversed today. Like somebody went in and bought just a bunch of them. Hillary at 181. Canadian seizure of checkpoints by U.S.-Mexican border frustrates state authorized pot industry. Nile even bounced. JP Morgan at resistance, Mike. Home Depot.
That was the end of March on the 21st, and then you can see
God, look at that sell-off.
that level here, currently holding down as we're speaking around this 337 level. I went ahead and identified some of the areas where the market's just kind of paused and established some of that consolidation for us. So we've got an hourly candle chart. We've got 4 areas where we can see value being formed. And again, in this instance, we're talking about value being formed at lower and lower levels, right? So currently balancing around 335. I think the line in the sand here right now, the bulls want to see this thing back above 360, but as of right now, no indication that we've rejected this lower level, no indication here that that the selling is eased or has slowed. We're kind of just holding and accepting this most recent lower area around 335. So let's take a step back. I want to show you why. Again, just kind of pushing back further on that bullishness because we were in a trend to the upside. That's very well defined here, topped out around 397. This is the move that we just looked at, again, on that hourly candle chart. But there was
It looks good on the weekly.
353 level because as we were rallying, you got areas of value formed at higher and higher levels. So we've added some time onto this chart, and we look at how this move lower is actually a bit of a reversal of the trend we had been seeing the upside. When we were balancing around 380, that breakout to the upside, that was a disappointment, the fact that they couldn't hold that upper level. Look at that V-top rejecting that upper level, and then again, just kind of working our way down. So taking out the breach of 353 was a bit of a game changer in many ways. Let's take one step back. I want to show you daily cam chart where we are relative to the 50 to 200-day moving average. This really speaks to that swift move we saw off those highs. You can see RSI also leaking lower here right now. So yeah, just a bit of a disappointment across the board for the bulls after that breakout. We saw RSI divergence here as well, and it's really yet to look back since.
Yeah, unbelievable. Okay, we're going to get to the next one, but I will say, I think it's exciting that Home Depot is working with Google Cloud to help people on home improvement projects using AI. They're still working on the shopping experience, and last but not least, you have the spring selling season. So maybe all of those will help you get towards that 356 level that you were talking about. Tom, how about AEM? When we talk about Anglo Equal, tell me about this. AEM, you think it's heading up above 70, right?
Yes, this is an Eagle. This is a large producer of gold, silver. And you can see, you know, you're trading at 62.78 right now. You could buy it at this time, at this place, put a stop at 59. I'm looking for this to go to 74. Now, what's so intriguing about this, okay, we know that the gold run has been extraordinary, right? And we know that when gold gets hit, it gets hit in an amazing way, which we've been hit the last couple of days, okay? That being said, you can see this stock hasn't even pulled back. So the amount of ore that they're getting out of the ground is extraordinary. When we see the numbers that come out in the next quarter, you know, for these gold and silver companies, it's going to be huge because the acceleration in the physical metal is up there. It wants higher price. I think this thing, you know, wants 74, and we can see whether it'll go higher than that. But it's
74.
showing its strength because most times, Nicole, what ends up happening is that when that contract comes down as hard as it did yesterday, most times these gold stocks get destroyed, not just a little, a lot. And this one hasn't. So my take is that we're going higher with this.
All right, we will watch for that. Ben, how about the technicals on this, please?
Yeah, this one hasn't pulled back much, Nicole. As Tom mentioned, it does want higher price.
It has pulled back. Well, that's yearly.
There's
Never
some very
mind.
bullish pattern here. Let's take a look at why, because we've got areas of consolidation, areas of value that have and continue to move higher. So again, Tom spoke of some of the strength we've seen, and we can see that here.
Back to 60.
Pretty well-defined consolidation area that's been forming, and we are in a 15-minute candle chart. It's been forming around the 62.50 level. You can see, again, high conviction on the left side of your screen from that balance area we were forming right around 56.50, all the way up to 64.19, topping out, and then again just kind of sideways since. So price decay off that upper level has been very limited relative to what we've seen as far as gold futures, for example, right, coming off a significant spike recently, an all-time high. Hey, that pattern we just looked at,
SPY has a megaphone.
Time frame plays itself out again in almost an identical fashion when you take a look at the weekly candle chart. So we have added on quite a bit of time just to get that longer-term look at price activity here, and this is why I'd have to agree. Tom said it wants higher price, I think he was arguing, and take a look here because we just recently worked our way back up and through the middle of this range, wide range trade that we've been in. Again, we're going back 20 years now where the stock has been capped around that $80, $90 level and has found support around this 15-20 area. So I just want to point to some of the strength here that we're seeing through 55 after a series of higher lows over the last, we'll call it 8 years. now opens up a door for a retest at $89 level. So there is some momentum here to the upside, and there is a bit of a bullish pattern playing out. You know, let's take one more step back. I want to show you where we are relative to the 50 and the 200-day moving average. You can see holding above both. You can see RSI supportive of this rally we've seen. The bulls really want to see this thing expand here, right? Take that next leg up and just solidify the working assumption that we're trending higher. But look at these areas of consolidation that have formed along the way up. It's like that staircase type pattern, and we can also see we're taking out some key highs along the way up. There's a lot of momentum associated with this, that's for sure.
All right, thank you for that, Ben. Last but not least, we're watching AMD. I mean, a lot of these semi-names have pulled back. I mean, NVIDIA is at 850, at 825, off of nearly $1,000. AMD has pulled back off of its highs, but you think there's some upside potential here for AMD. You picked this one over NVIDIA or any of the other names. Curious to know why, but you think it's headed higher, right, Tom?
I do, Nicole. And the reason I picked this one, it's great that you picked up on that too, by the way, okay? Meaning this instead of NVIDIA. This one here, this is like a typical day trade, swing trade for a couple days. Because what happens is that because the SMHs are so hot, that when you get a downdraft like this, which AMD is a big downdraft, my take on this one here is that, yeah, you could, you know, you're up $4 right now. You can buy it here. You put a stop at like 149 or something, and it wants to go to 185. Okay, so where I'm going with the 185 is that volume on the way down. Okay, that's when it kind of broke down. So what happens with the pick of this is that it's one of these deals that there's so many people that didn't get NVIDIA, that didn't get AMD, that on a bounce in the marketplace, they'll jump in there immediately. So I think we got a 2, 3, 4 day trade in this. And I'm going on the momentum on this one. That's what's going on. This is just, it's oversold beyond belief. People are going to jump in. You got to jump in, you grab your bread, and you get out.
All right, well said, understood. Ben, final thoughts here. Looking at this chart, please.
Yeah, this one looks a lot more like Home Depot to me than it does AEM, so I'm going to have to push back on this one here. Unfortunately, Tom, I apologize, but let me show you why. We've got a bit of a trend to the downside here. Since the stock topped out, if you remember, it was up around 227, and look at this swift move lower we've seen. Back down to this 150 level, currently balancing, holding around 152. Now starting to get a lift here, I'll give you that. Potentially establishing a bit of a bottom, but a lot of heavy lifting for the bulls to still do here before you convince me that anything really substantial is playing out here. Let's take a look at some of the areas of consolidation that formed off that high we mentioned, 227. You can see them on the way down. I had to get out that fine-tooth comb, and it could be that we're establishing something in this wider range around the 152, 53 area, but yeah, take a look. We're trying to get a lift here going, but still really no indication that we've reversed this trend as of yet. We've got a hourly candle chart here. So let's take a step back. I want to add some time on so we can get a little bit of a bigger picture look at that selling we just identified. Here it is. You can see from 227 all the way down, and you can also see the significance associated with that move lower off those peak highs. And when we pull up here again on this 4-hour candle chart, look, you can see we were trending to the upside, right, off the earnings that we saw back in October, November of last year. Well-defined areas of migration of value to the upside, spike high again around 227, that swift rejection of that upper level, and right back down below 170, not what the bulls wanted to see. A couple tests thereof, but in the beginning of April, we really sliced through that thing again. This is a bit of a reversal of that trend to the upside. At the very least, losing momentum to the upside. The way I say it, you got to take out 227 before you can really, on this time frame, regain composure. Some of those more short-term time frames, you've got targets are a little bit more closer and achievable over the next couple days or so. But I want to show you where we are relative to the 50 to 200-day moving average. Nicole, you can see this stock only up around 3% this year, but below the 50, barely holding above the 200-day moving average here. So let's keep an eye on this one. Again, momentum off the highs as of recent. Bulls have some convincing to do before I can really buy into this one and really start to establish that they're back in control.
All right, thank you both for the big three today. Always great to see you. Really appreciate it. Tom O'Brien of TFNN and our own Ben Lichtenstein on the charts. Thank you. Coming up next, we're going to spotlight earnings from Pepsi. The stock is falling in reaction, and we will break down the numbers for you next here on Trading 360.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab.
He's working for Schwab. It's 10:31. I'm gonna go make me some mashed potatoes. Netflix new highs. The Grand Wizard.
Getting back to earnings, it's a big week for earnings. We have about a third of the S&P 500 names reporting. Pepsi in focus. I want to break down that report. Joining me right now, Kim Forrest, founder, chief
Pepsi
investment officer at Boca Capital Partners. Thank you for being with us. So Pepsi beat revenue growth, gross margins expanded. The stock is reacting with a 2% down arrow today. I guess that's not unusual to see sometimes selling on the news, but some of your thoughts.
Sure. Well, I think that most of the earnings that are coming out earlier in the week are kind of precursors to answering the question, are things getting better or are they getting worse, right? Like that's what all investors want to know. And with Pepsi, it looks like things are pretty good. And you have to remember, they have a lot of room in the grocery store with a lot of, not just Pepsi, but they're also Quaker Oats and of course Doritos in the snack aisle. You know, they own a lot of that. And it looks like people have been spending and the margins are holding up. So that's very important. And I think that's why, you know, the stock has run up recently and it's coming back a little bit. But I think things are not as bad as many people anticipated in the food and beverage area.
Yeah. You know, I saw Wedbush has a 195 target on this. It's at 172 today, pulling back to your point. Snacks always seem to be a bright spot because Pepsi had, you know, different revenue streams, right? It wasn't just soda, but they also had the snack division, the Frito-Lay division. We did see snacks up about 2%. I read that earlier. And Frito-Lay North America revenue up about 2%. Is that good enough? Especially, there was another article that I was reading today about Ozempic and Wegovy and Mounjaro, and that they have actually found that people are buying less, or whether it's snacks or restaurants or whatever. I mean, I don't remember the details, but it was basically people are eating less, spending less on food.
Sure. So I think there's a lot of stuff that you can select from in the snack aisle, and it looks like even with Mounjaro and people spending less, or they try to spend less at the grocery store, they're still buying Frito-Lay. So I think that that's very good for the company, who has good brands. And
I don't know about that. At least here in Springfield, the chips, the Doritos are always packed. Every time I go in there, they gotten woke. And they're like $5-6 for a package now. $4.50 to $5 for a bag of chips. They're up like $2 in 3 years. So yeah, they probably, people are addicted to chips, but I buy the cheap ones. I'm not going to pay these outrageous prices. But the chip aisle, I mean, same as the cereal aisle. When there's no sales, they don't sell. When you got a sale sign on there, they sell. So that's about the only way they're making. But that's just in my store. But the store that I got, man, they bought out the Price Cutter, which was a lot better than what they got now.
Tend to like companies with larger margins than their competitors.
Yeah, and how about this? I mean, I know we often talk about semis and other
KD
groups here, so I know you'll be interested in this, and you probably already read it, but Microsoft and Coca-Cola announced a 5-year strategic partnership, and this allows Coca-Cola's technology strategy system-wide, so they are leading-edge, cutting-edge technology, productivity, fostering innovation. You know, when you think about how we are using generative AI, cloud, all these things to better position a company, is that good news for Coke and bad news for Pepsi, or you feel like they're all in the running for this?
Well, I think they're all in the running, but this shows you one of the reasons why. I know it's, you know, you and I always talk tech, right? And you're probably surprised today that we're talking consumer staples, but Coke has a great track record of being an early adopter of technology and then using it well. Right. It's not that just you're in the latest, coolest stuff, but that you actually deploy it well and return shareholder value by showing increased productivity. So yes, I did see that announcement today, and it kind of cements my idea of Coke versus Pepsi. It's not a flavor challenge, it's a margin challenge.
There are some concerns that the soda giants will have a flat sort of start to 2024, but as I noted, you did still see some up arrows, and Keurig Dr. Pepper goes in there. Which is your favorite pick before I let you go? If you were to buy these stocks, would you buy all three or just only one? Which one would you pick?
We like concentrated positions.
Bitcoin, BTBT, around 12.
And I have. I'm an owner of Coke. Because of their innovation, not just it.
I have a small side bet on this Bitcoin miner BTBT, only around 1,200. BTBT, I used to trade that years ago. Yeah. We busted past the 200. We got a two-headed snake. back to 290 something. Just under 3. May 17th, $3 strike. And you mean the 250? That's $2 at 43 cents. That's in the money. That's how I'd trade that. BT at $2. You like that one there better? I like because it has more contracts, but that could be one buyer. Man, he called that Groupon perfect. Groupon had a good run.
course, higher than the current core inflation rate. They're also, again, generating double-digit new subscriber growth and total revenues, which are close to 20%. The other thing is they're guiding on a forward basis incremental increases, which are more moderate in the mid to high teens in sales, but they continue to move their margin growth higher. In fact, if you look at the gross margins at 27.6%, they were about 200 basis points higher than the last 4 quarters sequentially. And their net income now, which was down 7% for the last 4 quarters, is only down 4%. So they're profitable on an adjusted basis, but they're getting very close to GAAP profitability, and I think that's also creating this interpretation, if you will, by the market of margin expansion, perhaps on the back of maybe some slower revenue growth.
I mean, amazing when you talk about seeing the profit bump, seeing the subscriber growth. I mean, the total monthly active users, 631 million. I mean, that's pretty huge. And they've had pricing power as well. Tell me a little bit about your example trade, George, please.
Yeah, so obviously the last few weeks have not been good in the markets, and so Spotify did dip down. But one of the things I'll look at in this trend, if you go back to 2021, the stock is now breaking twice above the $300 level, which is established, like I said, back in 2021. So this stock generally makes a big move on earnings and then just makes an incremental increase henceforth. So what we're going to do is play this sort of steady trend continuation by structuring a long call diagonal spread. So we're going to go out to the May contract and sell the out-of-the-money $330 call option, and then we're going to use the proceeds of that to finance the purchase of a June in-the-money $300 call option. So altogether, this is a two-legged structure, selling the near-term out-of-the-money option, buying the longer-term in-the-money option. This whole structure will cost you about $20 a share, or basically $2,000 a contract. So essentially, the stock needs to hit by the June expiration in 57 days, $320. And effectively, what this trade allows us to do is, if the stock does encroach on that $330 level in the next 25 days, that's fine, because that May contract will expire worthless, and then at that point in time, there's unlimited profitability potential.
Thank you for that. George Sillis, great to see you. And we have our disruptor every day, and today is Spotify. Thank you, George. Coming up next, more on earnings. We're going to take a look at UPS, find out what you need to know about this report. We'll be right back.
I remember when I first started flying.
She does remember. That's when I give her the ring. I said, will you be mine forever, please?
The picture for us, it's at 147 today for UPS. How are you feeling about UPS?
Yeah, we like it here. It has gone through a tough patch. There was a real boom from the pandemic and elevated e-commerce, and then we had the hangover impact thereafter. But it looks like we're maybe in the final innings, the last quarter or two of negative year-over-year activity, revenue, volume. This quarter they outperformed in their U.S. domestic segment, and it's still everything's down year over year. Probably will be again in second quarter, but should inflect to favorable revenue growth in the back half of the year, and they get some easing up on cost pressure when there's an anniversary on elevated labor costs.
Revenue decline, buddy.
So the back half sets up very nicely. So we like it here. We think we're
I don't know.
in the corner at this point.
I don't know. I think you're full of
I
crap.
want to talk about that, the favorable revenue growth going forward, perhaps. But Lee, I'd love to hear some of your thoughts. You read through the UPS numbers. We see the guidance here on the board. Your thoughts, is it more positive or negative here?
I think longer term is positive. I agree with Scott. The turnaround will probably be, well into the second half. What I thought was interesting, though, is they were kind of cagey about margin improvement due to the new contract they signed with the United States Postal Service to be their air cargo carrier. And, on the conference call, they asked, what do you think that's going to do to margins? Because remember, FedEx had zero margins on that contract. And they would not say what they thought the margin, they thought it might be margin neutral in the beginning. So that's one thing. It'd be interesting to see how that plays out. If if they can do it more efficiently, that would certainly help their cash flow and their earnings going forward. The other thing is, though, that the macro situation is a little bit weaker, I think, than they were kind of saying, because if we look
That's what I'm
at
thinking too.
and Knight Transport warned about weak demand, and they came out and said, UPS said that their retail and manufacturing was slow. Also, Europe was down 5.8%. Now, they were in a recession, so maybe that will turn around a little bit. But it does seem that there's a little bit of pressure on the consumer right now.
Yeah. Look, when we're seeing these numbers, and it sounds like you're positive going forward, Scott, certainly about the second half of the year, it's still a little disconcerting when you see the year-over-year numbers, falling rather than gaining. But to your point, you had the e-commerce boom after COVID, then a hangover, as you said. Are you at 153 now? Is that your current target? And do you still feel there are headwinds here? Maybe, and you tell me, the airlines, for example, saying business travel is coming back. Maybe business everything is coming back to a certain extent, and that could help a name like UPS.
Yeah, I think a few things at play. Yeah, that's right on our price target. And if anything, I think we feel comfortable with that level, and there's opportunity to go higher. On revenue, Lee highlighted some of the concerns of the macro environment. But
well, it's at a good spot.
Comparisons will get easier.
If we pull it back down a little bit more.
And if we do get a pickup in the macro, then that could really benefit. And
1, 2, 3.
A big drop off in expense impact in the back half. So these are the things that play to favorability.
1, 2, 3, 4.
Yes, and another thing Lee mentioned, I think, was probably the big topic of this first quarter was the win of the U.S. Postal Service contract by UPS from FedEx. It had turned into something very not profit friendly for FedEx. We don't have the details yet, but UPS has said it's going to be accretive in 2024. Now, it may not be right away. There may be some cost ramp before all the revenues fully get ramped up, but they've said it should be accretive in this year, and we would expect it to be a nice tailwind to next year as well. It should allow UPS to more efficiently use its system. Its air system. They're going to carry the mail for the U.S. Postal Service via air domestically, and that's what the big contract is. So that has a lot of opportunity, but again, like Lee mentioned, we don't have full detail on that, but I think there's opportunity that it could be good.
Right, air cargo volume, that's incoming, that will be good. Just quickly, I want to get back to Lee, but FedEx 272, UPS 147. Do you have buy ratings and outperforms on both?
$3 pullback.
Scott?
I have an outperform on
UPS.
We are perform rated on FedEx, which is actually going through a very major cost reduction program. So we lean towards a positive bias there. We think both these names are in a
Bull flag on FedEx too.
expense reduction, and we've had challenging volumes. So if that picks up, they both set up very well. We like UPS a little bit more, simply because of the Postal Service win is nice, but their positioning and where they're turning right now, they were a little bit later to the negative.
Oh, that's
pressure,
UPC.
and a little bit later to come out of it. I think they're coming out of it now. So we put the more favorable rating there.
Yeah, a great conversation. To my friend Lee Bowl, we appreciate your contribution. I'm sorry I'm wrapping it up here, but I did want to get some of those trades and opportunities for our viewers to better understand.
Oh, shoot, CVNA. I keep thinking about it, never look at it.
Lee Bowl, thank you both very much. Thanks for being with me here on Trading 360. I'm Nicole Petalides.
The pullback, right?
2 p.m. Eastern time. Make sure you download the free Schwab Network app in the Apple App Store.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between
Look at the hour time frame, you get a different look at it. We're now just touched resistance.
Stop waiting and
we just now touched resistance at the 63 on the 1 hour time frame. 4 hour, 4 hour, 4 hour, 4 hour, 4 hour. What'd I say, 1 hour? On the 4 hour. Four hour. Look at the 4 hour. The 1 hour too looks nice. See at resistance level at 75.52. That's what this was already on here, this trend line. 75.52. Oh, there you are. Careful with SPY. What you got, Carvana Weekly? You can really for everyone. It's expensive at the current. It's expensive at the current level. So get a better price. Is keep it on watch. Carvana. So I've got two bearish. Well, I don't. This is not bearish, but it's an expansion. It can be bearish and bullish. Oh well. SPX has a 1-2-3 with a 1-2-1-2. It'll be peace in the fire. Oh, I got carried away again. You have a good trade right there, SPX. 123, 123. Nailed it. Randy.
of mishaps that it's, we already know that it's facing, and the fact that shares are down 12% this month, 35% year to date heading into this report. But they're also facing intense scrutiny over safety records and standards, several federal probes, lawsuits, the resignation of its CEO. Its CEO, Dave Calhoun, said he's stepping down at the end of 2024. 32 whistleblower complaints in the past 3 years. One saying that Boeing should halt production of the 787 Dreamliner due to safety concerns. The mysterious death of a whistleblower. The fact that in January, an Alaskan Air Boeing 737 MAX 9 lost an emergency door mid-flight that led to the grounding of 171 Boeing MAX 9, 737 MAX 9s, and where they found more loose parts. So as such, Boeing sold 40% fewer 737 planes than the same period last year. Overall commercial airplane sales were down by about 36%, 36.2% to be more precise. So I think the question is, will the stronger sales of 767 and 787 segments, which actually generate more revenue per plane, make up for the 737 slump? That's what we'll have to see. Should note that there's also some concerns from analysts heading into this report in terms of the research and development expenses also kind of weighing on the bottom line. But in terms of the actual numbers that we're looking for, a loss of $1.43 per share on revenue of $17.69 billion. That number came in at $17.92 billion last year, so a decrease in revenue. But yes, I think the big question, is the bar low enough, or is this a stock that could sell off on potentially more disappointment or really lack of clarity from Boeing, because there's still a lot of question marks, especially amidst all of these probes?
Caroline, everything you said is correct. It's hard to, dispute them, except this. They still delivered 83 planes last quarter. In March, 113 new planes ordered, 85 of them for American Airlines. So with everything that's going on and the headlines are horrible, and the flow of headlines, something we look at so strongly on this show, is horrible. But they're still in business, they're still making planes, they're still delivering planes, they're still getting orders, so there's still confidence in these planes. And it's amazing to me, with all the headlines, all the whistleblowers, all the scrutiny, that there's been no real, since years ago, tragedies. There's been none. There's been little itty bit, small things.
Don't-
but no one's been
you
hurt.
better
No
knock on
plane
wood,
has
buddy.
crashed. It's fascinating to watch this play out. And what does it take? What will it take to turn this around?
Confidence.
Well, not since 2018.
The CEO resigned.
350 people died, but I don't know, flying on a plane where the emergency door, comes crashing down. Or if you take a look at some of the other things that they were facing, I had a whole timeline of the mishaps that they've been facing, a wheel coming off, the fire shooting out of the engine, no real tragedies, but not a lot of confidence in,
There you go,
in the
baby.
planes that you might be flying on. I did see that Kayak was out with some numbers saying that searches have spiked 15 times higher recently for
Man, it's
flights
at a good
that are
spot.
not
That's
Boeing.
for
And
sure.
I heard even Oliver Rennick say that he did the same thing when he was looking for a flight and went with Airbus because they were similar prices. I haven't gone that far yet, but I do think that there's definitely a tarnishing going on with the brand and just a lack of confidence in Boeing. That being said, when it comes to the Wall Street community, when you take a look at the breakdown, the majority of analysts look at Boeing as a buy, likely due to the fact that we don't really have all that many other options. As I said, it's just Boeing and Airbus. So there's 20 buys, 9 holds, and 2 sells, and the median price target heading into this report is about 40% higher than where it's currently trading. So Boeing's down 35% year to date. Analysts think that it can at least regain that over the next 12 months plus 5%. So let's see if the analyst community is any less bullish after this report. But I don't know. It does seem like what else could go wrong with Boeing?
Yeah, and remember, you can't cancel orders with Boeing and go to Airbus because then you get your planes 3 years later.
Oh boy. So a big problem when you have a monopoly. Big problem when you have a monopoly.
In here, I mean, your thoughts here. They're expecting first quarter commercial shipments down over 36% from prior year's quarter level. So it seems like, Nathan, that a lot of the bad news is already in this stock. We've seen price target cuts, some downgrades recently. What's your thoughts here?
Yeah, that's probably the best thing that you can say about the stock is that perhaps it's priced in. It was $100 higher heading into 2024, which is pretty remarkable. You look at the analyst revisions 90 days ago, looking at right now, fiscal year 2025, $8.48 EPS. Now that's down. The current estimate, $6.01. It's continually been on a downward slope there. GE Aerospace, they had healthy earnings today. Boeing's down on GE's news. I'm wondering if GE is beginning to maybe eat some of Boeing's lunch there. It really is that confidence that Caroline talked about. And, the company has been trying to mass produce at the expense of, quality. And so, they really need to, it's going to take time for them to earn basically their respect for having a high quality aircraft that you're putting out there. You don't want to mess around when we're talking about airplanes here. If you're building transformers and you want to cut costs, that's great. You're building toys or whatever, that's fine. If you're talking about aircraft here, you don't want to have a confidence issue. So, the stock looks a little bit tentative heading into the results. Technically speaking, we're basically in no man's land. 180 was supposed to be support. We broke below that. The next support level that I see from a longer term basis on Boeing is around 120. So we're basically, looking for an $8 implied move one way or the other heading into the report. I don't have a sense. To Kevin's point, I can see that this is so oversold. Maybe you get some kind of relief if there's anything good they can pick out of the report. But it's been a series of, negative headlines that has hit this stock all year.
Yeah, going into that report, nearly $8 move either way. Give us your example trade here, Nathan.
Yeah, sure. With that in mind, that I don't have a sense of which way it will go. As an example trade, one way that you could play that, if you believe the implied move, roughly $8. I was looking at a double calendar that's selling a long call calendar, establishing a long call calendar and a long put calendar at the same time at the implied move. I put that roughly at the time when I was looking at the stock down at 162.50 on the put side and 177.50 on the call side, selling those calls and those puts for this Friday and then covering those by buying the same strike for the following week's expiration.
All right, yeah, let's break this one down. Double calendar position here that we've got up. May 3rd weekly cycle, 10 days to expiration, buying the 177.5 strike call, buying the 162.5 strike put, both out of the money, and then selling those same strikes in the April 26th weekly options that expire in just 3 days. Paying roughly about $1.25 debit for this one, Kev, but your break evens are around 157 on the downside, about 185 on the upside. So the risk is what you pay, so $125 per spread on this one, but this takes care of a 1 standard deviation move either way without having to pick a direction.
This is a trade that the guts of this trade is in line with a move higher, either or lower, and playing that difference between the implied volatilities. Right now, about a 69 and a 45 implied volatility. So that gives this a more reasonable price tag and ability to collect theta and look for a move to either one of the short strikes. Like I said, either to the level of 177.5 on the upside, 162.5 on the upside. So about with a $7.50 move, $7.80 move, Nathan's got his strikes about $15 wide.
Yep, and you've got some assignment risk into those short options into expiration over the next 3 days. Keep that in mind. But Nathan, this is one of those where you're taking advantage of that dispersion between implied volatilities on something like this. But at the same time, if you're a little bit more bullish, maybe just do the call side or maybe the put side if you're a little more bearish, right?
Yeah, absolutely. And you know, also, you want to check and see if you agree with the market's implied $8 move there. You know, Boeing typically does not. That's the only thing that with this type of a strategy, you know, if you were setting up an iron condor, iron butterfly, that would be a different risk profile, so to speak, heading into something like this. With the double calendar here, that strike selection is important. So if you didn't think that $8 was in the cards one way or the other, you know, you can adjust your strikes accordingly. And the good news about that is that it's not going to increase the debit that much. So you get risk defined, take advantage of IB like you were saying, and then a relatively low capital outlay versus some of those other breakout strategies.
All right, great discussion on the double calendar there in Boeing going into earnings. Should be an important one. All right, thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for discussion on Tesla and the sentiment data on the stock moves. EV maker has seen its stock dump over 40% so far this year. They report earnings after the close. It's going to be a big one. Stick around. Fast Markets coming right back.
Okay. These stocks. Cleveland Cliff took a big nosedive. Worse than expected first quarter results.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern.
This Cleveland Cliff took a big nosedive. I've got 1850 for support. That's a 63. I'm almost thinking that they're priced in. Do 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 do. SMCI pulling back. Hello, mannequin. We got Tesla earnings coming. Are we excited? I think the Tesla earnings are priced in, but we'll see. We pull back and hit 140 again and retest it. And then if that doesn't hold, I think we can drop a lot more. 136 and then maybe 120. And that's when I load the boat. The Model 3 Performance all-wheel drive is at $52,990. I don't know nobody, any of my friends, any of my family that could afford a car like that. I mean, I could, but I mean, no one. I have no friends that could afford it, that would want to go out and spend $53,000 on a car. Tesla files notice of planned 2,688 layoffs in Texas. Tesla begins taking orders on the new Model 3 variant. Have we seen the picture of this car yet? What the heck is it? Huh. Hmm. Right when it squeezed, right there is when it dropped. That's pretty tight. Oh fuck, my achievement sitting up here. Tesla hit the 63. Tesla earnings will be probably crushed. The IV, yes. It's like SPY's coming down here. Watch SPY puts.
build here, but we have the major catalyst of the week starting off really today when we get Tesla earnings, but we have earnings the rest of this week, which I think will totally capsize anything else that's impacting these markets once we get big tech earnings.
I got nothing to add to that. I think that's spot on. I don't think we're out of the woods yet, but I don't think that if you're a bear in this market, you're feeling overly confident either. I think it's sort of been fought to a draw. There was tons of weakness the last few weeks, but a lot of that ground is being made up here in real time. But on a technical basis, still a lot of damage done. Huge moves in the NASDAQ, huge moves in the Russell, huge moves in the S&Ps, and of course the Dow wasn't even down on Friday, so the Dow allowing some of these other indices to catch up, but I couldn't have said it better. Big tech earnings this week is going to set the tone and likely determine where we go next.
It is, and I think that it will also be the case for also the following week, because we also get then the rest of big tech earnings the next week. So it's 2 major weeks that are definitely earnings central, definitely earnings focused, but as always on this show, we'll kick things off with upvote and downvote. We've got a nice auto theme to kick off the show today. Following that, we'll chart and trade our upvoted names. For FOMO today, we'll look at Super Microcomputer, which has been all over the place, trying to recoup some of the losses that it saw on the session on Friday. Today with a pretty nice rally, but still well off of yearly highs in Super Micro. We'll also be diving into the age-old Coke versus Pepsi debate. We get Pepsi's earnings, and we'll end the show with Affirm, as we're seeing now its partnership with Walmart perhaps could be threatened by a newcomer in the buy now, pay later space. Although Affirm has also been one that has had a pretty stellar last 12 months, I will say.
Yeah, we just talked the other week with an expert on this space and talking about all the build-up and buy now, pay later. So a pure play within that space with the firm. So looking forward to that discussion. Looking forward to SMCI, of course. One of the kind of, I won't call it a general because it's not to that size, but one of the names that went from being unknown to known very quickly because of its movement. So that'll be a great discussion for FOMO. Let's get to that autos theme, though. Not endorsements, not recommendations, of course, for upvote, downvote. Let's start with GM. I know this was an earnings reaction, but I see a move to the upside. This hasn't been an earnings thus far early in the season that's rewarded upside. So was this a case where sentiment was beaten down enough to allow for some upside, or was this just a really, really strong report?
I think this was a pretty strong report, and I think that you have a lot of favorable factors that the CEO highlighted, Mary Barra, of course, who mentioned that they're seeing overall early sales momentum for their EVs, like their Cadillac Lyriq, which benefits from scale, material costs, and mix improvements. Also are seeing battery cell costs come down significantly as the Altium Cells joint venture plant in Ohio did ramp up production, while lower raw material costs also provided a pretty nice tailwind. I mean, I think the fact that you're seeing some of their various high costs come down was a win. I think that you actually could have honestly painted this either way, because the way the market's going to move, it seems like anybody's guess right now. But I will say, raising your profit outlook for 2024, they did give, overall adjusted earnings.
Always clean as Jim.
To be slightly higher than what had been expected. It wasn't like a blowout, but revenue did rise 7% year over year. Adjusted earnings also was a beat slightly. So, beat on top and bottom line. Forecast that came in better than expected for now the remainder of this year. I would say objectively a strong report, but I have to give GM some credit. It wasn't like we've been selling off into this print. Stock was up 20% on the year through Monday's close. So they've actually been faring a difficult landscape quite well.
Yeah, within 1% of the last 52 weeks high. So I'd say I agree with you. An outperformer in this space. We know that this mix towards hybrids had been favorable in terms of outperformance of pure play EVs. But it sounds like they had good news on the EV front, which is the first time we've heard anything regarding positivity in the auto space, particularly EVs, in a long, long while. Let's not go too far. Let's go to Ford. Now, we talked about this stock oftentimes being stuck in this sort of lower double-digit purgatory. It's still there. Don't worry. It hasn't escaped in terms of its performance. But we haven't heard their earnings yet. If there was ever something that could get it moving, you'd have to think an earnings announcement, both positive and negative, could be that catalyst.
So Ford strangely reports tomorrow after the closing bell. So we have a full day of trading ahead of this event. But I will say that bottom line projection does imply about a 33% decline year over year. We are also seeing that the first line projection has climbed slightly lower, about 2 cents lower in the last 30 days. So top line does imply year over year growth of about 4%. So over the last several quarters, Ford has been able to pretty much top expectations. It hasn't necessarily always resulted, though, in a higher price the next day, as we did see their Their fourth quarter highlights, 29 cents per share, which did beat expectations, rose about, as far as revenue went, revenue rose about 4.5% year over year. Factors at play though for this quarter is we do already know that they sold just over 508,000 vehicles in the U.S. That was up 7% year over year, while their Ford brand rose about 6%. Their Lincoln brand was up 31.5%. And actually, look out for hybrid sales, as that was up 42% year over year. Sales of their EVs also, though, rose about 86% year over year. That segment of their business, though, is still expected to continue to burn away at cash, as it's not expecting profitability anytime in the near horizon. But the hybrid conversation is one that's been interesting because it hasn't just been echoed by Ford. It's just like we're seeing this heightened interest right now in the all things mix between your legacy autos and your, of course,
a couple things that I will add, because I think that's spot on. When we're looking at this, we got a little bit of an idea of maybe how they're going to look after GM, but we give it a hard time for not moving a lot. It's had huge swings throughout this last year. It lost about 33% from high to low here. And then it's a little bit of a lesson in math. If you lose a third and then rally a third from the new price, you're nowhere near where you used to be. So we're seeing that in real time. Went from about 15 to just below 10, and it's now rallied from 10 to about 13 in real time. So still quite a bit off of those highs that we saw a year ago, Jenny. But a lot of movement. I mean, 30% swings both directions is not anything to just shrug off. So while Ford maybe isn't as volatile as the next name on our list, it's absolutely been a name that's been moving around more than we're used to seeing in this last year. Without further ado, though, the main event of this segment is clearly Tesla. This is going to be one that's appointment viewing, as it always is, for so many reasons. It has not been the last 18 months for Tesla bulls, though, that they had hoped for.
So I have to say that for all of the headwinds, which we can get into, I mean, they're reducing their staff. We're seeing margins squeeze, expected to be squeezed now for the remainder of this year. We're seeing prices come down. We had news of that yesterday here as well as overseas. And we're also seeing a major demand concern. Are we actually seeing,
I don't like you, honey.
Right now, the demand, is it actually having to scale back its supply because there's not demand? I think that a lot of these questions may or may not be answered, but I would say something that I've learned from covering Tesla, to the extent in which I honestly talk Tesla probably 4 or 5 times every single day, is that you have to tune in on this earnings call to have a proper opinion, because it is always a huge reason I've been a longtime fan of Elon Musk, because he has such a vision of where the company wants to go. Now, does that actually translate into dollar and cents? No. And I remember last earnings call, Wedbush's Dan Ives was one that mentioned it was very frustrating. He was very broad. He sort of painted the rest of the year with broad strokes, which typically is received as a negative by the street. But that was the first time we saw a lot of this tone shift. Some of these sort of notorious bulls were like, wait a second, Elon Musk, what is he doing at this company? So I think, well, I definitely argued you should separate the two, the perception of Elon Musk versus Tesla. It's very hard to, but tune in on the earnings call, because it will give you a better glimpse of this company than any analyst takeaway.
Whatever your opinion on Elon Musk, Tesla is not Tesla without Elon Musk. It's not trading the way that it does. It doesn't have this volatility. It doesn't grow to the size it does without the lightning rod that he is. Love him, hate him, have no opinion, doesn't matter, because he's been such a public figure within this world and so forward with his thoughts. It's led to what we've seen happen with Tesla over the last decade plus. So it's just sort of the territory if you're involved with this space. What I'm going to say, though, when we're looking at Tesla, this is going to test that theory that we've been talking about. We talked about with Netflix how tone has shifted from better than expected, better than feared, to how big is the beat going to be. I don't think that's the sentiment right now in Tesla. I think it's the opposite in Tesla. It's how bad is the miss going to be. And so if they just deliver something that's even okay, is that enough to send this stock higher? We'll find out when we hear the results in the conference call.
I also have to say that there's this hilarious visual we got from X that is Katy Perry with the Cybertruck, and a lot of the responses were like, does this mean that Tesla's earnings are going to be terrible? I don't think so. I think the puns that you could set up from that are amazing. I think it's a good PR moment. I mean, Katy Perry's pretty well liked. We talk about Taylor Swift enough as it is.
Look, I mean, if you can get one of those Cybertrucks, good for you. It's outside of my price range, and they're just hard to get, I think.
They are hard to get. I think the waiting list is quite long. It's definitely not for a lack of demand on the Cybertruck particularly.
I'm also not a good enough driver to have one of those. I know they drive themselves, I think, but it's a little bit dangerous. Those things are tough.
I'm sure this would surprise no one that knows me because I'm very accident prone, but yeah, there's a reason I don't have a car. It's because I need to stay on two feet. But last name today is one that is a fun one. Unfortunately, not having the funnest day as far as share price goes, but we are talking all things LKQ Corp. Wow, say that 5 times fast. As this is a name I've never ever noticed before. It's down 14% on the session, and it's definitely the greatest laggard in the S&P 500 today. It's actually the North American largest company that recycles U.S. auto parts and truck parts. So for that reason, it kind of fit our auto discussion, but pacing for its worst day in almost 3 years. They reported first quarter earnings where they saw actually an increase of 10.5% year over year for revenue. Well, we did see net income come in around $158 million. That was definitely below the $270 million reported a year ago. Cash from operations did continue to rise. That was something, but overall they did declare this quarterly cash dividend. That was as of April 22nd of 30 cents per share. Gave some disappointing guidance though, and said that overall they are dealing with right now rising costs and a softer first quarter than have been expected. So now they're bracing for the impact of that for the remainder of this fiscal year. So some disappointing guidance and things down 14%. It just goes to show that one slight flaw of your earnings, I know it's not just one slight thing, but one thing that the street can hang on to and it sends your shares down 14%.
Yeah, so pricing pressures kind of clouds that picture because we have sort of a mixed inflation picture, I would say. There's certainly things that are showing that ramping back up, but you don't necessarily have the growth stuff ramping back up. So definitely a macro read here. But my big question is, if people aren't buying auto parts to the same extent that they were, is it because they're buying new cars now, or because they finally moderated, or is this just economic weakness? I mean, I could argue both ways, but we'll find out soon because we're going to hear from Ford, we're going to hear from Tesla, we just heard from GM. But I think right now, just with GM and LKQ, you could argue that it's because we're buying new cars, we don't need these replacement parts anymore.
Yeah, that is a really good point. I wonder if it's just like an outdated, like with the new practice of building cars, they're getting more efficient in some of their materials. But I do know, hey, material costs has been something to consider. So we'll dive more into the charts of Ford as well as Tesla, both pre-earnings looks at both of those auto players. We'll also be looking at some example trades. Stick around, Next Gen Investing. We'll be right back.
Ding, 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 ding.
Schwab Bank Investor Checking, the checking account.
Okay. Today's winner on the loser on the watch list is the Donald. Today's loser. And Boeing, Salesforce, CRM, and Coca-Cola. Today's winners, A-Lab, Norwegian Cruise, up 91 cents, SMCI and CCL, so your cruise lines are up. Oh man, look at aluminum. This is one I looked at yesterday I wanted to buy. I don't know if it was yesterday or the day before, but I was looking at it. That would have been a good one. Aluminum and pawn. I alerted that one yesterday. SPX just hit the 200 and SPY. Anybody take the SPY puts with me, Mon? So it did 11:55 right there. I thought I called it out earlier before that. We were up here. Yippers. $53K on a car. I'll buy a house with that. I'll buy a house and fix it up for 53 grand and sell it for 200,000. 300 grand. Buy a house for 100,000, put 50 in it, 53,000 in it, and sell it for 250, and then buy the Tesla. Like, yep, trade for a week and then buy it. So off the 200 SPX, as we hit the 200, off the 200.
This is in this Friday's expiration. 32, so that's a $3 wide put vertical, and then defining the risk with the 124 put, that's an $8 wide put vertical that's being sold. So you can see that unbalanced nature, that skewed nature allows this to be done for a credit. It's done for a 50-cent credit, anything where these options are out of the money. So unchanged, down small, up higher, you'd simply keep the credit at expiration if they expired worthless, that's $50. But it can expand to as much as $350 if it moves down to $132. Most importantly, though, it brings the break even of this trade down to $128.50, and it defines the risk where you just have $450 in risk. So best case scenario, move to the short strike in this case, but no upside risk. In fact, that's a profitable scenario where you would just simply keep the credit.
Okay, and now to look at Ford, which also reports, but tomorrow after the closing bell. And Ford, I have to say, has recently been in a really nice upswing. I mean, it was one of the best performers yesterday, I believe. Today, hanging on to a 0.5% gain. So this chart is more of a comeback story, sure, but nice to look at some optimism in the auto space.
We've rallied about 34% from those intraday yearly lows that we established right here. So definitely a more nice situation for the bulls here. And yesterday was a good day as well for several reasons here. You can see first, leading up to yesterday, we had this kind of rising wedge type shape, typically regarded as a more bearish pattern. We did get a downside breakout as well that looked rather concerning because it took us below our moving averages, but we stabilized right around here, near the $12 mark, just below that area where price halted a couple times before, giving us kind of this W shape here. You can see that we were bouncing around between about 12 and 13 for a little bit here before we did eventually break to the upside, but it didn't hold. We found ourselves near 12 once again. This was a repeated support area, so that was something that held true once again. Yesterday, finally, to get to the point here, is that we crossed above all three of our moving averages in one fell swoop yesterday. We also re-entered our upward sloping trend line that's part of our rising wedge shape here. Now, we weren't able to quite clear that $13 mark where we've seen repeated resistance, so kind of a range established here, barring that we did have this noteworthy upside breakout here to think about as well. But the $13 mark seemed important to me.
So now, as far as some resistance, we're watching RSI. What is momentum telling you behind this recent slight uptrend?
Yeah, and we can see that we've got kind of a matching trend line in price and RSI. They both started around the same time here. And you can see that we had as well a matching dip below that level, a false breakout. And this was not great for the bulls either because it took us below the 50 midline at the same time that it invalidated our trend line here. Now we are back in action once again, though, because we're above the 50 midline and we're back above our trend line here. So it's almost like, we kind of erased what happened there in terms of this technical indicator here. So it'll be interesting to see if we can clear above 13 and resume some kind of upward action here.
So now when we look at some levels here, we do have a full day and a half really ahead of their earnings, so I know a lot could happen, but I'm sure we'll move on the back of everything else going on in the market. So what are you watching as far as some support and resistance?
I'll keep it simple. 12 and 13. Those are nice round numbers, real
Alex
easy to
is gonna love that.
Yeah, exactly. But 12, like I said, and I'm not just throwing out random whole numbers because it's easier. We can see that 12 was a repeated support point, like I said, and 13 was a repeated resistance point, like I said. So there's a sound logical basis for saying these numbers here, but also 1365. I thought if we see this pink line here, that was where we had a small gap and topped out there, and that was about where we failed to make too much progress beyond. We stopped right on the money there. We gapped up at the open, but then formed a large bearish engulfing candle that eventually resulted in a downside move there. So 1365 would be another upside point I would be curious about in this name.
Yeah, and Ford, I have to say that for all of the flack we give them about being stuck in this range, while it is a tight range, it does move, and it does trade with some fantastic volume. So it is, I think, always compelling for that very reason. But 12 to 13, we'll be watching here. We're sort of right below $13 a share now, but appreciate the insight as always with you, Pat, our chart master. So now when we trade this name, Alex, walk us through your thinking for today's example trade.
You got to think maybe a little bit differently at a name like Ford. There's very little options premium. It's a relatively low volatility name, and of course, it's got a relatively low stock price per share. So what I'm hoping with this type of a strategy, or someone who puts this type of strategy on, they're hoping that those technical levels don't hold, because this one's looking for a big move. Maybe the antithesis of what we typically see with Ford. Buying the 13 straddle for $1. I skipped a week, so it's not this Friday, it's next. The market maker move is about 80 cents. So you're going to want this to outperform that 80 cents one way or another, and perhaps this one could be profitable. Has 2 break evens, Jenny, below 12, above 14. And you can see limitless potential to the upside because you've got a long call. And of course, defined profitability to the downside, but that's only limited by 0. So the bigger the move, the better it can do. And since it's only $1 debit, you got $100 in risk for potentially unlimited upside over the next 2 weeks.
Yeah, absolutely, and I think that unlimited upside is what the bulls of this name are hoping, that this recent uptrend and recent uptick in Ford as well as GM can continue here. Obviously, we'll be watching once we get those earnings tomorrow after the closing bell. But that'll do it for this segment. Now, coming up next, it's time for FOMO. We are looking at one of the most FOMO-type stocks you can really discuss throughout the markets in 2024, that is Supermicro, which is attempting to claw back its losses made last week. We'll dive more into its price activity as of late, coming up next.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled
Man, a lot of alerts coming in. SPY came back and hit the 200.
Because it was always done. But clearly that's not the case, is it, Charlene?
do, 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 do. I had a Baidu on watch this week too. Look at that baby. Starting to pull out. 94.25 off that trend line last week. Now we're hitting the 200 on Baidu. Still under $100. SPX off the 200. Boom, baby. Exit idea 507131. Yabba dabba doo, we broke resistance, SPX. Right to the next one. 507,331, mama. I'm getting out right there because that's where I want to get out at. Right now. Just, well, it'd be nice to hit 31, but I don't. I don't think. Oh, 22. There it is. Yabba dabba doo. I want to see what this girl sounds like. She's crying over Taylor Swift. Are you ready? I better turn this down in case it gets real loud. Damn it. I lost.
Someone plays the starting line and you jump up, line and you jump up, but just don't understand how you don't miss me in the black dog when someone plays the starting line and you jump.
I cried like that when I kissed Dolly Parton. I said, Dolly. You got your resistance there, Yoko. You hit it. Oh, now we got a new number out here. 50638 by Runde. Almost 2 o'clock. The market pulled back. The market pulled too much. I already read that.
Group will join the show discussing the company's latest earnings report. We'll also get you ready for those Tesla earnings due out after the bell, which of course is down about 40% this year. One headline after
Attempting to get
another.
one contract.
Panel standing by to discuss those defense stocks with a focus on Lockheed Martin, RTX. Raytheon, right? So let's take a look right now at the exact numbers. You can see the S&P 500 back above that 5,000 mark. We're led by consumer discretionary, consumer staples, healthcare. Staples is actually not particularly great today, but certainly you're seeing in financials all with up arrows. The NASDAQ right now up 1.6%, the Dow up 0.75% at 38,531, and the Russell, the small caps, up over 2% today. As we take a look at oil and gold, they're mixed right now. Gold $23.40 a troy ounce, pulling back by about $6. $83.21 the barrel for oil right now, and we're seeing that oil moving a little bit higher today. The VIX at this moment 15.93, and the U.S. dollar pulling back a little bit at this moment. In the meantime, Kevin Hanks is with us, senior equities contributor here on Schwab Network, taking a look at this market, which, of course, you're watching this back half of the trading day, but last
VIX down more.
Conversation with David Waddell, and he was saying that he felt the earnings, all these tech names, the oversold feeling that we had, that we would have some of a rally this weekend. Look, we're already up 2% on the S&P. What are you watching for here?
Yeah, hey Nicole, it's a strong start to the week, that's for sure, with markets up again over 1% here as we get to midday. But Nicole, that could all change with earnings coming out after the bell, as you know. We've got economic data today that showed the PMI composite, the manufacturing part, dipping back below 50. That's probably concerning. That put a bid into bonds. That weakened the U.S. dollar, and stocks took another leg up based on that. Now, the serious
Bad news is good news.
Economic data certainly begins to pick up as we get to Wednesday's durable goods, Thursday first look at first quarter GDP, and then personal income and outlays on Friday. So big data coming up the rest of the week, despite all the earnings that we have coming up. You mentioned Tesla after the bell today, Boeing tomorrow morning. Both those names beat up, and the sentiment is extremely negative. So it's going to be some fun to weed through these earnings and see if we can get any good news out of Tesla and Boeing, Nicole.
Yeah, well, everybody can't wait to hear what Elon Musk will say on the call this afternoon. Huge. GM, impressive, right? When you take a look at those numbers, in fact, the stock's doing well today, too, after we heard from the company. Break it down for us.
Yeah, GM stock up right around 5% as we get to midday. GM's earnings, $2.62 earnings per share. That's beating the $2.06 estimate. Revenues, $43.0 billion versus $40.61 billion estimate. So a big beat on earnings per share and revenue. They upped the guidance. Full year 2024 guidance from $9 to $10, from $8.50 to $9.50. So up about a half a dollar for the earnings per share. Free cash flow, $8.5 to $10.5 billion. That's up from $8 to $10 billion. So nice bump in free cash flow. Remember, all this despite losing $106 million in their China operations.
I don't get it.
Despite weakness in China, GM and gas cars, right? ICMs are right now what's working for GM. Big earnings bump out of them.
Huh.
Yeah, without a doubt. All right, a lot to look forward to. We have a third of the S&P 500 companies reporting this week. We see GM doing well. A lot of exciting ones thus far. It's only Tuesday. Kevin Hanks, thanks so much.
Yes, ma'am.
Let's take a look at the bigger picture. Matt Thompson's with us, CFA co-portfolio manager, Little Harbor Advisors. And Matt, how are you feeling about the market? Is it the earnings that will give us a boost? I mean, the thought here that I'm hearing from some folks is we have this earnings season, but as the year progresses, earnings
Kind of remember the week we had last week, if you can remember what it was like. And then today, Monday, it's like a whole new story. None of last week's ever mentioned. I mean, look at the sell-off. You know, I talk about my 5-day rule. That's a huge sell-off. You know, that's a huge sell-off. Back to the 200, and then we're going to realize what we're going to do. So, what, 5108, my guess? Oh, this is going to be a good one. ABVC room. What's that on the SPY? I'm going to be watching this ABVC. I feel like grabbing a couple hundred shares here. Be nice to get it at 117. I got an order in. What's it say marked at 129? Cancel them.
Options activity. That's one of the core things we do at Market Rebellion. That could be bullish or bearish. And in the first three names, certainly JetBlue, Xerox, and Affirm, we had some pretty significant put buying in the past couple of days, indicating that these names are going to disappoint, as of course they did. JetBlue, I think almost at session lows now, down 17%. The CEO talking about overcapacity in LATAM. I'm not so sure that's really why JetBlue is doing the way it's doing. I think that failed merger with Spirit was a major distraction for the C-suite. There was a lot of legal costs and deal breakup costs associated with that. But expected anticipated increase in seat costs, not good news for flyers as we go into the summer travel season. I think we're going to see airfares particularly from JetBlue, continue to go up. But man, what a volatile sector with everything that's happened with Boeing, and yet United and Alaska reporting last week, notwithstanding all of the safety issues, doing really, really well. So I'm not yet voting out the airline sector, but JetBlue we do anticipate to be under some continuing
Yeah, right
pressure.
now down about 17%. You can
Yeah.
see that gap down on that chart without a doubt. We also had Xerox and Affirm. Thoughts there?
Yeah, well, look, Xerox, sort of your grandfather's Oldsmobile, right, of the data business. This is a company that was in copying. I don't remember the last time I made a photocopy on a Xerox machine. They're struggling, as I think you heard the CEO talk about around earnings of that structural transformation, right? Those were the two words he used to describe the challenge ahead of the company as they attempt to pivot to a B2B SaaS workflow and workforce solutions provider. Very hard to do, and man, oh man, they missed the mark massively relative to what the street was looking for. That combination of two things, I'm going to continue to be bearish on Xerox for sure.
And so when you look at these names, and you'll tell me about Affirm, but do you see 5%, 10% downside? Are you suggesting, you know, maybe doing the options play, maybe looking at some puts, or just sort of, you know, getting ready or shorting this somehow? For example, Xerox right now, year to date's already down 20% and trading at 14.57. Where do you think this is headed?
I think it's headed further to the downside. Look, we always recommend or suggest using options. Limits your upside, but also limits your downside. Short selling, explicit short selling is for the brave-hearted. And in this kind of volatility that we've seen this year, I don't necessarily recommend that. And Affirm's an interesting one. That was down almost 8% in the pre on that announcement that Walmart went with Swedish competitor. The name of the company they chose is escaping me right now for this BNPL or buy now, pay later. The stock is actually at session highs right now, almost 3.25 before we went live on this spot. Nicole, I like Affirm in general in terms of the buy now, pay later contingent. And I think as consumer credit, and of course we talk about this a lot on your show, consumer credit card balances continuing to make highs month over month, over $1.3 trillion.
New high
As
on
consumer discretionary
SPX.
spending continues, the discretionaries were hot so far today, trading in today's session. As folks continue to make that discretionary spend, they're going to look for alternative sources of credit. They're going to turn to the BNPLs. And notwithstanding Walmart choosing One is the name of the company, by the way, we think Affirm is well positioned. So I might actually look to pick some of that up on today's sell-off.
Oh, okay. But yeah, because as you noted, we're watching right now. Affirm has sort of changed directions. Affirm right now, AFRM, right, is now up 3%.
Right.
Someone agrees with you.
Yeah.
Someone agrees with you and said, hey, I like when it sells off, and maybe I can do a little bottom fishing as well. And then last but not least, when we look at Spotify, I mean, I was looking at Spotify earlier today. We just covered it in the movers, but millions and 631 million monthly active users. I mean, and they have pricing power, right? They raise prices in the U.S. There's no problem. Tell me where you think Spotify could be headed. Right now it's trading at 311.
Yeah, we love this big major streamer, right? And this, if you had to sort of have a test case of a perfect earnings report where they blew the doors off the street's expectations, not only top and bottom line, revenue and earnings per share, but coming out with this unbelievable MAU, that monthly active user. And of course, that's the metric that traders care about when you're talking about the streamers, perhaps even more so than the revenue and the earnings per share. Where they're getting, and of course that, Nicole, is what a lot of investors and analysts are saying, where's the further upside in names like Netflix, which we're also continuing to be bullish on? Where are they going to get these additional users? Where are they going to get these new subs to keep the street happy with this massive quarter-over-quarter increase in those MAUs? And man, oh man, Spotify, they're doing something right. They re-signed, of course, Joe Rogan, the #1 podcast, which of course is a lot of why people go to Spotify, and cannot cover this stock without mentioning their cost-cutting efforts that they undertook during 2023, cutting 17% of their workforce, slashing expenses, and of course, with a streaming business like Spotify, that margin every time you add, if you bring that CAC, that customer acquisition cost down, as Spotify has done, margin goes up. We think this one is got a further bull run to enjoy, so we like that name.
Yeah, I was reading from some of the analyst reports. Goldman Sachs had something too. They talked about the margin improvements and also the financial health was impressive with the first quarter revenue demonstrating robust financial health. So certainly some good news there. Great to see you, Mark. Thank you so much for being with us. Mark LaPrestia of Market Rebellion. Thank you very much. Coming up, President and CEO of Pulte Group joining us right here on the show. We want to hear the very latest from this home builder. We'll be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Welcome back to the watch list. I'm Nicole Petalides. Going to focus on Pulte Group, the company reporting first quarter numbers. Glad to have them on. An earnings beat. Supply has been tight. Demand still very hot for the housing market. Joining me right now, it's our pleasure to have on Ryan Marshall, President and CEO of Pulte Group. Thank you so much for being with us. So the quarterly report's out. The stock's up 4.5%. We know the hot housing market, spring season's upon us. Tell me about the environment and the latest quarter, some of your thoughts.
Yeah, Nicole, thanks for the opportunity. And I'll start with the quarter. It really was a record quarter for the company. We had several records, including revenue, margins, and earnings. Revenues for the quarter were over $3.9 billion. Our gross margins are approaching 30%, and we delivered a first quarter earnings record for the company of $3.10.
PHM.
Specific to your question about the operating environment, it is a phenomenal operating environment for the company, and it's really hanging on the idea that the country
3 Black Crows off the 21.
Housing. We estimate that we're short at least 4 million homes in the United States. While that's a phenomenal operating environment for the company, it's not the greatest situation for the American consumer. We're doing everything we can to produce more, and we need to see kind of more cooperation from the cities and the municipalities where we build in order to do that. I'm incredibly proud of our 6,500 employees that have brought their best effort to work every single day, and they're doing a great job for our homeowners and for our shareholders alike.
And so in this environment, we're seeing certainly new homes that have been doing really well. For so many reasons. Existing homeowners not so quick to sell. Maybe they already have a good mortgage. A high environment for mortgage rates really, to a certain extent, has given home builders a little bit of a leg up because you can work with folks on mortgages. That's a big part of it too, right? Sort of getting the new home out there, putting that supply out, and also giving them some sort of flexibility on rates. Tell me a little bit about that, because new home sales certainly seem to be a shining star.
Yeah, you know, a new home has a lot of advantages. You get the latest and greatest technology in your home. In addition, you get top state-of-the-art energy efficiency. So there are a lot of benefits that come with a new home that you simply don't get with an older home. In this environment, our most powerful incentive tool is our ability to offer a forward, we're able to go into the capital markets and buy tranches of forward mortgage commitments, which we can in turn offer to our new home buyers. Our current offer, we can offer a 30-year fixed rate mortgage at 5.75%, which is it's a tremendous deal for the consumer. So not only do you get a new home, you've got the ability to get a mortgage rate that you can't really find in the resale market.
How quickly are the houses going? I mean, just even finding the land is difficult and a challenge. I'm sure your team, you know, your 6,500 person team is working so hard on everything, but part of it is just finding the land to build the right home in the right place. But these must be going fast. How fast are they going, and can you quantify the demand now versus another time?
It was an incredible quarter of demand for us. We sold on average 3 homes per active community that we have a month in the quarter. So it was definitely one of our stronger absorption quarters, which is indicative of the demand that's there. And it goes back to some of my opening comments about the underlying demand for housing in the country. We're so supply constrained that nearly everything that we can produce, we're able to sell in fairly short order. We do have available spec inventory. And so for homeowners that are looking for a quick move-in, they're coming out of a lease, or they're in the middle of a relocation, we do have those opportunities. About 50% of the homes that we sell are spec homes, meaning we start the home without having a buyer order attached to it. The other 50% are ordered as to-be-built homes.
Yeah, I mean, you walk into a spec home and you say, oh my goodness, this is so gorgeous. I want one now. And that's what happens, and people want it and they make it happen, but by putting it out there and sort of giving them a taste of what you can provide, and as you said, technology, energy efficiency, you know, I sort of think about how this rolls out to other companies. Are you, you know, I think about solar, so then we can think about the solar panels. Are you putting more solar? EVs, are you putting chargers in the garage? You know, what kind of products are you seeing most demand for? Because this is it's not just Pulte Home, but it's all the other companies and stocks that go along with it. Are you using, you know, Trex in the backyards? Are you know, the materials for paving the driveway? What are you using a lot of these days?
So a lot of those things are regional specific, and we're quite literally using almost every single one of the products that you mentioned, and then some. We do use exclusively in our home Whirlpool appliances, so we've got unbelievable appliances that are state-of-the-art, and a great partner with Whirlpool. We've got state-of-the-art air conditioners and heating and cooling units. One of the things related to technology and energy efficiency that I think is worth highlighting, starting in 2025, the organization has, we set a goal for ourselves that every one of the homes that we build 2025 and beyond will be Energy Star 3.1 certified. So not only can you get amazing technology in the home, you're also getting state-of-the-art energy efficiency as well. Many of our homes come solar ready. Many of the homes come with EV chargers, or at least the capability of hooking up an EV charger. So we're trying to make sure that we're providing the things that consumers value. One other technological kind of highlight that I'll make is every one of the homes that we build, irrespective of price point, come with a commercial grade Wi-Fi backbone. So our engineers and our design team, they have optimized the Wi-Fi backbone such that all of the technology that is available today, plus anything that comes down the road, it all needs a great Wi-Fi network to work on, and we make sure that that's included in every one of our homes that we build.
right? And that I nothing's better than great Wi-Fi. Everybody's work from home. They want to stream everything. You need great Wi-Fi. I couldn't agree more. But that's going to be regional based on your carriers and things like that. Solar could be one company that you're using panels for. EV chargers could be one company that you're using. For in-house stereo systems, that could be Sonos. I don't know. Are there Ring cameras? I'd love to hear more. Is there any? You mentioned Whirlpool. That's in pretty much every house. Is there anything else that's pretty much in every house?
Yeah, Ring doorbell cameras are another one that are in nearly every one of our homes. We use a lot of smart thermostats as well. In some cases, those are Nest. In other cases, it's proprietary equipment that's part of the HVAC provider. So could be Trane, could be Carrier, could be Lennox. Those are all possibilities as well. Flooring goes in every home. Cabinets are in every home. We have regional supply agreements with a variety of flooring and cabinet manufacturers. Those are probably some of the ones that I would highlight the most. Of course, nearly every home that we build has got lumber, but that's more of a commodity as opposed to a brand name, which I think you're looking for brand names.
Yeah, no, look, you could have Lumber Liquidators, you could have Home Depot. I mean, we could go on all day. But I think this has been very exciting. I'm really happy to hear about how quickly the homes that you said, 3 homes in each community, and how quickly the demand is, and how quickly they, fly off the shelves or fly off the driveways to have people have their future memories and good things happen for them. I'm sure the demographics have also been another interesting part. A lot of younger folks are now, I saw an article, Ryan, that said that younger folks, I think it was Gen Z, I don't know, instead of getting married, they want to buy a home. So, getting married is not important. I want to have my own home. Have you heard that? This will be my last question to you. Are you seeing that a little bit?
Well, one of the things that we talk about inside the company is the purpose for our organization, and we very, very much do believe we are a purpose-driven organization, and it's to build places where people can live their dreams. Each and every day we have the opportunity to help Americans and families find their version of the American dream, and more often than not, the home is at the center of that, and we get to be part of that process. One of the great things about our operating platform is it's unmatched in the diversity of consumers that we serve. 40% of our consumers are first-time home buyers. It's the most exciting time to see a first-time home buyer move in, and that's the group that you were describing, Nicole. The other 60% of our business is catered to move-up buyers. So these are, families that have owned homes before. They're moving up to something bigger or a different location. And 25% of our communities are under our Del Webb brand, which is our active adult age-restricted communities. Oftentimes we like to say it's like a cruise ship that never sets sail. A lot of lifestyle, planned activities, etc. So we think it's a tremendous time for housing, and we're thrilled about the operating environment.
Yeah, it's great to see you, Ryan Marshall. Thank you so much. This is the first time we've had the opportunity to chat, and I'm glad to hear how well everything's going. And of course, you're offering these great long-term fixed-rate mortgages for folks, making it possible for them to get their dreams. Ryan Marshall, President, CEO of Pulte Group, which right now is up over 4% on the record quarter. Thank you.
Thank you.
Still ahead in the second half of our show, we'll get you prepared for Tesla and much more. We'll be right back.
But she's going to prepare us for Tesla. Yes, she does. I'm thinking it'll hold. Oh, the SPY. We're going to see what Tesla's going to bring. Tesla's going to bring. Oh, I didn't see if I got in a trade earlier. I haven't even checked. No. A, B, V, C. Apple up today.
And welcome back to the watch list. I'm Nicole Petalides, coming in live from the New York Stock Exchange. Just a quick look here at the indices. The S&P's up about 2% already, and it's only Tuesday. A busy earnings week as well. You're seeing all up arrows with the S&P up 1.25%. The Nasdaq's up 1.7%. The Dow gaining 271 points, and the Russell also with an up arrow. Ben Lichtenstein is with me, senior futures contributor. Ben, 90 minutes left. What are you watching? I know you have oil on the mind, markets on the mind. Give us the 1, 2, 3 between now and the closing bell.
Yeah, Nicole, I'll keep it real quick here. Green arrows across the board, right? You mentioned the S&Ps. I'm noticing the Russell also, small caps gaining by 2% here today. And the S&Ps over the last couple days have seen a 2% run up. Let's take a look at that move off the lows from yesterday, and a significant move to say the least here. You can see from a brief visit below 5,000, 49.64. That's right around that March low, all the way back up to 50.76 today. So we're holding that upper level right now, no rejection, and currently gaining by about 1.25%. Let's take another look and step back, a bigger picture chart, because it's been a while now. We've been saying this move we've seen off the October lows. Again, if you remember, that was down around that 4,000, 4,100 level. All the way up to these highs we just recently saw in the end of March, beginning of April. It's tough to sustain that kind of momentum, right? But we talked about how a little bit of consolidation up here, a little bit of horizontal development, and a little bit of value being formed at this upper level would be very healthy and very much what the bulls would cheer on, I think, at this point. So yeah, the pullback we've seen off the all-time highs, not necessarily what you'd like to see if you're long this, but if you're looking to participate for the longer haul, and if you think the trend is still to the upside, this could just be potentially another buying opportunity. And just that one step back, and that 2 forward, 1 step back process that establishes, well, what we have on our screen here, a very well-defined trend, bottom left to top right, Nicole.
God, man, the lords are going off right and left today.
Great to see you. Thank you so much.
It's Netflix. It's hot.
Follow the markets here. So far, so good in this week. And right now, joining me, George Schultze is with us, founder, Schultze Asset Management. Thank you for being here. A tough week last week. Different stories so far this week. What do you make of it?
I think this is a time, Nicole. It's a time to, get ready for the sell in May and go away season. The markets have been great. There's a nice recovery going on. Last year was good too. What people aren't really pricing in is what might go wrong. Everybody's been talking about interest rates, the election, all good things. Earnings, we're in the beginning of the earnings season. Things are looking pretty good. But on the other hand, probably a good time to start thinking about short selling. Taking profits and looking for where the next leg might go.
Yeah, because there's
Who's this
two
guy?
different concepts, right? Taking your profits, selling May and
Redneck.
go away is different than short selling, because that's for the
Red
people who are going to
redneck.
stick around.
That's true.
Right,
That's
and
true.
watch and see.
Well, what I'm thinking is take your profits and longs, because the markets have been good. Nobody's really expecting anything bad to happen.
Right.
And earnings, are looking pretty good.
Yeah, you
Interest rates
noted
are
that.
hanging
You
in
were
there.
talking here in the notes, you have 73% beating so far. And the expectations from what I'm hearing going forward into the rest of 2024 are looking pretty good and fundamentally could help.
That's right. But nobody seems to be really talking and focused on the fact that we still have an inverted yield curve.
I have.
Interest rates are up tremendously
I have.
from where they were 24 months ago. And the fact that distress is starting to pick up.
I have.
More and more companies having difficulty making ends meet, especially companies with leverage.
And I'm one of them.
Selling some of those companies, you might be seeing more bankruptcies in certain sectors, not just because higher interest rates, but also inflation and because of secular change.
Yeah, I don't know if you're naming any of those names, but there's no doubt when you look at the distressed securities market, there was a lot of talk about after COVID, then we had Omicron, and we had a lot of bankruptcies.
Yep.
You have a high rate environment, and a lot of companies have a hard time with that, right?
I think that's right.
Well, are there certain kinds of companies that you think may be more distressed than others, in your opinion?
Yeah, I think EV companies are really facing issues. Companies like Lucid and Rivian, you know, Tesla. If you had shorted Tesla, you would have done very well so far this year.
Right, which most people did not.
Yeah, yeah.
Right.
Well, because people have been burned so badly with that one. But easier to short something like Lucid, you know, where it has more liquidity challenges and really hasn't gotten production to the point where Tesla is. You know, so that whole sector, I think, is resetting and readjusting to the fact that there's not a big enough charging network, that consumers can't afford to buy EVs, and God forbid if they do buy them, the cost of repairing them is outrageous.
Right,
So
and
that-
getting financing is tough too.
That's right. Well, the cost of that financing has gone up hundreds of percent, thousands of percent. So that's a big change. And most vehicles are sold with financing. You know.
And as you mentioned, Tesla, and we're waiting, obviously, after the bell today, but now we're hearing of more layoffs. In fact, saying that they're going to terminate 2,000 employees in Fremont, California.
Yeah.
We've heard of recalls. We've heard of layoffs. We've heard of lowering the prices.
Well, he wants out of California, honey. Taxes are way too high there.
But this one here, it says plans for 2,688 layoffs in Texas, according to this report.
These are all bad signs.
Yeah, it certainly doesn't sound great, but you know, Elon Musk said that they do this reorganization regularly. I mean, do you feel like that's good enough? Do you feel like when he says they're lying, we're not canceling our cheap?
If they do that regularly, I don't know if I'd want to work for him. Come next quarter, am I going to still have a job?
Necessarily something you want to be on the ride for along the way. I mean, Facebook, Meta, got it right. They took some drastic measures about almost 1.5 years ago, and last year wound up being a great year for them. You know, but the market recovered, and they're selling more advertising with Facebook, Meta. You know, with Tesla, I think they're doing it because the market's changing. You know, consumers are.
They won't tax
having
you.
More difficulty buying
Would you
electric vehicles.
short Tesla today ahead of the earnings?
If I had to make an investment.
You can move to Puerto Rico, and all your day trading is tax free. So I mean that's a real good idea. You can buy a nice house in Puerto Rico for a good price. But you'd be tax free after 6 months
I think also with the rental car companies slowing down
on capital gains.
had a terrible couple periods of earnings because they bought so many electric vehicles, and the cost of repairing those vehicles far exceeded what they had budgeted. And so I think that that's difficult for the consumer also thinking
And
forward.
people who would be interested, for example, I rented a lot from Hertz over the last couple of years for many reasons, and so often there was a Tesla which I would love to rent, and my teenage sons were like, "Yeah, get the Tesla."
Yeah,
I
sounds
said,
great.
"Listen, I have to drive a long way. I don't know. I'm going to be driving at night by myself.
Yeah.
I don't know how this works.
The
I don't know."
infrastructure is
So
not there.
part of it is just, you know, people need to be informed. Maybe I would have rented a Tesla if they said, here's how you do it, here's how you charge it, you know, this is how, but you know, it's just too foreign for many people at this point. Last but not least, Bitcoin, is that something on your radar? Is that something you dabble in or no way?
We have been looking at Bitcoin. The halving is an interesting thing.
Right.
Our big investment with Bitcoin was through the Grayscale Bitcoin Trust, which has been trading at a large discount.
Right.
Now that discount is on, so we've been monitoring.
Now what'd you do? Pause on me?
GBTC, is that what we're talking about?
Yes. And it was a home run last year and into this year. And it's continued to go up with the price of Bitcoin. But now, they're starting to see some redemptions, and the market for that, that
So at
trade is going up.
59, do you just sort of buy, sell, or hold that at the moment?
I think it's becoming more of a sell now because
really?
it's gotten close to fair value. There's a question, though. We'll see what happens with Bitcoin with the halving that's supposed to bring up a lot more demand.
Yeah. I think it's George Schultz with a reality check today. Maybe some people are getting ahead of themselves with some excitement on certain things, and they need to take a pause. Thank you.
Selling that and go away.
It's true. I mean, that is an old adage here on Wall Street, and it's served well for many. I didn't get my almanac out. I don't know how often that actually works, but I know it's true.
It's definitely seasonal. The markets are seasonal.
No doubt. Nice to see you, George. Thank you so much.
Great to
George
be here.
Schultze, founder of Schultze Asset Management. Still ahead, we'll bring in our panel to discuss the very latest on the defense stocks. We'll take a look at Lockheed Martin, RTX. Our panel is ready. We'll be back.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Dang,
No
man.
politics, no noise. From bell to bell and beyond. Available anytime, anywhere on
Martin in particular is a consistently profitable company, started to grow again a little bit in the first quarter, particularly in its space division, but has a 2.7% dividend yield. That's twice the yield on the S&P 500. Company generates a lot of cash. It's going to be increasing that dividend, and it's also buying back stock too. So management's telling you they think the stock is attractive as well.
Right. It's funny because I'm not sure I've ever heard management comment on stocks too much, but how do you feel, Ed, about the group? Do you have a favorite in the group, Ed?
Yeah, I don't really have a favorite in the group. I mean, any group that relies so much on government spending. Let's remember that Lockheed, 92% of their revenue comes from the government spending. And I don't like that at all. I like natural companies, that
There you go.
The economy, not from government spending. So I'm not a big fan of Lockheed or RTX. Although if
I mean, this guy's smart. I'm going to follow him.
There are people who would take the other.
See, I don't understand why the government wants to spend all this money when they got so many corporations that can do it.
Going to need, national security. Where do you stand on that, John?
Well, I think Ed makes a great point, and it's nice to have a blend.
I'd give them incentives.
So Raytheon has that.
I wouldn't be forking out all this tons of trash, tons of money.
Through its Pratt & Whitney subsidiary and
16 trillion and
which it bought a couple of years
18
ago.
trillion in 3 years.
General Dynamics is another defense company that has exposure to commercial aerospace because it owns Gulfstream. I think what you get with Lockheed is probably not going to be that great long-term growth, but Nicole, to your point, Lockheed is likely to be in business for the long run for sure. Consistent profitability, around 10 to 12% margins, and maybe a mid-single-digit revenue growth at best. So it's a bedrock in your portfolio, but probably not going to be one of your better growers.
It's got some billions on it.
The Tomahawk missile, and we've seen those in use over the last decade. That's something that's been
Jet engine
very
ramp stall.
exciting.
Oh,
We
wow.
talked about Northrop Grumman, General Dynamics. Ed, let's expand it out. You said you liked Raytheon more than Lockheed, but again, not your favorite group. Let's make that clear. But if you add General Dynamics and Northrop Grumman in there, NOC, tell me a little bit, Ed, some thoughts there.
Well, I don't know the breakdown on how much government spending goes into those other companies, but I do know that there's a smaller percentage of RTX that goes from the government than it does to Lockheed. And the reason I say that is that, we're a country that, is bankrupt. So how much can you rely on the government to fund your company? That's a big question. Now, there's obviously tensions out there, and we could always print more money, and, and that goes to Lockheed. But at the same time, I'm just not a big fan of the government supporting a public company.
Right. I mean, I'd say, like, as I look through, I see a lot of positive comments on the group. John, where do you see the most upside potential for some of these stocks on your price targets when we look at these names in aerospace and defense?
Well, I like to track the dividend growth, the companies that are signaling to the market that their business is in good shape, so they're raising their payouts to their investors. And lately, Raytheon had a 7% dividend growth. That certainly isn't bad. Lockheed Martin was around 5%, not quite as strong, but that's one of the indicators I look at. And I certainly agree with Ed and the government, but one other way of thinking about aerospace and defense is that is a core competency of our U.S. economy. Raising money, aerospace and defense, technology, pharmaceuticals, those are where the U.S. really shines. And I think those elements belong in every diversified portfolio. And to me, Lockheed's a great holding with that nice dividend yield.
Yeah, yeah. It's great to see you both. Thank you so much. John Eade of Argus Research and Ed Butowski. Thank you very much. Great to see you both of Chatwood. That's going to do it for us here on the watch list. Thank you for being with me. I'm Nicole Pedalides, live to the New York Stock Exchange every day, 11 and 2. Here, and download our free Schwab Network app. It's available in the Apple App Store, 24/7, schwabnetwork.com. Thanks for being with me. Keep it right here. Market on close. Oliver Reddick next.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem.
Good afternoon and welcome to Market on Close. I'm Oliver Rennick. It's a good day 2 Tuesday. Bulls continuing a bounce back. Heading into Tesla earnings this afternoon, that is, of course, the highlight. Tech is doing well. Big giants are helping. But there's broad participation in the market is pretty much solid through and through, especially considering this morning's data were accommodating to bond bulls, allowing for a bit of a shift in the macro narrative to start off this week, as we saw PMI numbers come in light, particularly on the manufacturing side. That occurred after months of surprise manufacturing strength and recovery. So dipping back into contraction, even though services and overall our composite figures did stay above 50 in expansion territory. Market is taking cues from weak data. I don't know if I call it bad data. I guess sub 50 for manufacturing is technically by definition bad. So it's kind of a bad is a good day. That is where we are again. If you're wondering what the market cares about after NVIDIA in the momentum tech trade and very close second place, possibly trying to usurp the throne from tech as the main catalyst, is the bond market, is inflation. And so when bonds firm up today and you get a print that comes in light, then you have bullish action. And it all follows through basically perfectly connected to the outline that we have used here as our framework. Rates going up shows up in the Russell first, bad for small caps. Rates come down. When the data's soft and bond yields are going down, the Russell is the biggest winner. Look at the way small caps surged at the precise moment that bonds did. This is your small cap trade. This is your direction for rate sensitive assets. Where the Russell goes, so will rate sensitive assets. So that part at least is helpful in its simplicity and its straightforwardness. When you're thinking about the role bonds have on the market, you start with the Russell. That's your compass to figure out which direction rates are going, which direction rate sensitive assets are going. And so today, that's a nice piece of reprieve. As far as the tech stuff goes, very much to be determined. But obviously it helps to have a backdrop of strength in markets when we try and determine how earnings are going to go. A lot of times trend is a big part of that.
So here was the SPX, and I said I got out of it right here. 1, 2, 3, boom. Let's do that again. 1. So we're at the end of the day, power hour. We're getting close to power hour. We had a 1-2 triple top. So you put power hour, close to power hour, and a 1-2 3. Boom. Spy mate hit the VWAP.
I will say, as far as like the pessimistic case, but I guess if
And their
you're-
margins are supposed to get worse, which is going to make them even more expensive.
Yes, but there is that expectation. So it's all about like gauging like what the street is actually expecting.
Spy to
They
the
are
VWAP.
expecting the margin story to be disappointing. They are expecting that to be the remainder of this fiscal year and actually into I think 2025 as far as their fiscal year. But it's also about then where do the goalposts set as we go into earnings? Is this something that we've set now so low where a small beat, a small degree of optimism could then start soaring? Absolutely, but Tesla's still expensive. That's where I have a hard time. But I guess the argument can be made if you value this company like a tech company or an auto company, it all comes back to that age-old argument.
That's where it's interesting because a lot of times we can use Tesla as a gauge for the broad market, the risk appetite. Does it still work when it's been the worst performer in its category the past year, Kevin? Or if Tesla gets buyers this afternoon,
I don't know if that's
should
true.
we be feeling good about the rest of this week and the rest of tech?
I don't think you can compare.
I don't think you
Tesla
can either.
To the rest of tech. I think Tesla's its own universe. And we had a great discussion.
It's a tech stock. It's its own universe, but you can't compare them to the other ones or the market. It's not a market maker.
Both so beat up, both the
He said so beat up. That's a clue to buy the son of a gun.
on your show before, when everything is negative, it takes one sliver of good news
Yep,
to make a
I'm
stock
telling you.
In
I'm in
turn,
it.
When everything is positive, it makes one thing going wrong or light to make a stock sell off. Example, Netflix. So I'm looking for some bright light out of both Boeing and Tesla to make these stocks recover. You know, the short interest out there is now massive in these names. And
your logic then would suggest that if they don't, if the Tesla earnings aren't a bomb and they don't come to buy it, then there's really a lack of risk appetite here because it's one of those beaten up trades. The bar is very low. If this earnings doesn't miss, if it's positive and stock doesn't rally, then maybe we still have some easing of risk appetite here.
I guess I mean that. I try to look at each one of them individually, and I think today they'll take the oxygen out of every other discussion you're having about the market this afternoon, and it's all about Elon Musk being a CEO. You're seeing that in headcounts, you're seeing that in production cuts and lower prices. He's managing his variables to fit where the overall economy is. But then if you're a bear on Tesla, you have to understand the pipeline.
Understand
All
it.
the other things that they have that are not EVs.
Well, right now they've got too many EVs and they're at top prices.
Yeah, exactly right. And he's
Pipeline,
gonna lower
schlipeline, I don't know.
And he's going to get, they're going to get through inventory. But let's talk, I mean, there's so many things you can talk about. Infrastructure in this country has to catch up to that.
Yeah.
Right? To where the EV demand is.
Yeah.
People have to feel good that they can road trip in an EV.
Yeah.
When that happens, when there's not ugly lines of people, charging their cars, then this is going to start happening. But it's going to happen at the market's pace, not the government.
Market's pace today is 2% for Tesla. It's pretty good for EVs overall. The chips are back up. The general participation is pretty broad. There's earnings-specific stuff going on, like in GE as well. Global Life is the biggest winner, speaking of short interest. So it seems like a lot of this market looks like beaten down trades, bouncing back a little bit. Tesla should be in that category, which means the stage is set for it, I would think, to get a little bit of reprieve if they don't totally bomb.
Here's the thing. There's two things I think that matters, and that's FSD and Model 2. If that's happening, whether it's like where or when, if that's happening. And then everything else, I don't care. I don't care about Elon Musk's pay compensation plan. We were fighting over it with shareholders. I don't care about the fact that, they had a 10% layoff and they've still been hiring at 10+% rate.
She's so great.
I mean, none of that matters. People have to stop and focus.
It doesn't
on
matter.
sell off on these news catalysts. So it's like, then where's the balance? Where's then the rally when we have good news? I guess we haven't seen that yet. So I think Model 2, FSD, that's what I'm watching. But I also challenge people to actually tune in to the earnings call because there's so many opinions about Tesla that I read and I'm like, well, did you listen to the earnings call?
Oh, I know.
It feels like the bearish camp spends so much time focused on like depicting Elon Musk's character. I don't care. Tell me how we get back on the road of not shedding market cap for Tesla.
Update Robotaxi.
Yeah, that's
Please
it.
give us an update on Robotaxi.
I don't think we get anything. Not till August, right? He's already laid out the timeline.
You don't think he'll mention robotaxis? they have to. That's like their whole like revamping of their business model.
I guess we'll see. If they rely on talking robo-taxis, stock's not going to do well. That's my prediction. If they come out and they deliver some really good numbers that make people go, oh, actually, after all those price cuts, their margins are still better than GM, Ford, maybe I should be buying Tesla again. That, to me, would be a sign here that you've got some appetite coming back in. All right, fun, guys, for the preview. Thanks, Jenny Horn, Kevin Hanks. Obviously, that's the highlight this afternoon, but it's still about an hour away. Let's bring in Keith Buchanan, joining us from Globalt Investments, portfolio manager. Keith, thanks for being here with us this afternoon. When we look at these earnings, should we be going mega cap by mega cap to try and figure out where the market goes, or do we need to start with bonds and the more economic macro discussion?
Well, thanks for having me. I think you do both, to answer your question vaguely. From the earnings standpoint, we feel like they're in the spirit of the Olympics and maybe even some track and field. The baton has to be passed from a really scary sell-off in equities that's been premised pretty much on the Federal Reserve becoming less restrictive over time, and now passing on to earnings, which seems somewhat familiar. This is where we were in December and January when it became clear that the Federal Reserve might not be cutting 6 or 7 times, and maybe more like 4 or 5 times.
Okay,
but
I didn't get it
as the
good.
market anticipated a less dovish Federal Reserve, the earnings picture took the baton and absolutely pushed, which the Federal Reserve becoming less dovish is hampering on multiples, but took that E, the denominator, well beyond where expectations thought. So, call it Meta, NVIDIA had the historic additions to market cap, which pushed the market beyond the concerns for the macroeconomic environment. So we're right back where we started. And now we're focusing on large cap tech, as well as the rest of the marketplace, which we think is somewhat still ignored, to see if that can push expectations on earnings beyond the multiple compression that's brought about with perhaps a less dovish Federal Reserve for the rest of 2024.
It's a very good point, because we start off the year tech dominating the macro, rates going up, we got to shrug it off. We had a lot to talk about with AI. When we're thinking about handing the baton, I'm getting a little bit of PTSD from junior track, where the guy in my 4x4 didn't get out fast enough. I blew out my hip flexor before he could run. Is that what's going on in the market? Because it seems like as soon as we try to hand the baton, that's when we started caring about rates again. Oh, we want to pass it to the small caps? Well, guess what? Inflation's too high. Oh, you want to pass it to non-tech? They don't have the growth. So what do we give it to?
Well, this past 5% pullback is that blown out hamstring. We've seen this earnings season come in, frankly, just a couple of weeks too late, where for the rhetoric, frankly, more exciting economic news from a labor standpoint, to inflation also seeming to have a little more resurgence or sturdiness to it, if you will. Yes. And so this earnings season couldn't come at a better time. It actually probably, like I said, just a little too late. The baton has to be passed now. That's what we think this is a real turning point, if you will, or a fork in the road of whether we continue on a downward path or we can get some stability with the market movements, as we have some really large cap companies that carry a lot of weight in these big benchmarks that report earnings that on the past earnings season really pushed the market to astronomical heights and new highs. In the middle, again,
3 minute
turner that we're seeing from a macroeconomic expectation
SPY.
from a reserve standpoint.
Yep.
So we think Meta reporting, Alphabet today, Tesla less so, but also kind of going forward over the next couple of weeks, NVIDIA down the road a couple of weeks. These are really important, not because they matter more to the economy, but they matter more to the market because of their sheer size in these indices, and they can really, as a tail that wags a dog still.
Do you have a favorite in that category? Obviously, we're thinking Tesla with this earnings coming up, but there's been some major dispersion within that group. Is there a leader that we have to count on more than ever right now? What's the most important earnings in your mind to keep that strength from big tech going?
Sure. We don't look at the Mag 7 as we have to depend on those that have a bullish case. We think they're very exciting economic conditions that are percolating across the economy. They aren't necessarily in AI-driven mega cap tech. If you look at our earnings standpoint from today, actually, look at Philip Morris beat on a margin standpoint. We had you had Pepsi, which had a more challenging quarter, but there are a couple of several names across the spaces that have proven that it comes down to keeping your revenue stable and being able to expand margins in this difficult environment. And we're looking for the industrials to continue that path. Financials have kind of started to overhead the reports of the bigger banks, but also across the discretionary space as well, and staples. Those spaces, like Columbia Clark, that reported this morning, have shown some stability in margins that's really promising, and is green shoots, if you will, for our economy, but not necessarily coming from the hottest 6-year spaces. We feel like there are opportunities outside of the Mag 7 to outperform the markets, particularly if you have any sort of dislocation in those top 6 names ex-Tesla.
Do those trades, the more kind of staple-like qualities, I guess maybe, but really from a cash flow standpoint is what you're arguing, kind of quality, but not necessarily growth, because we don't really associate these companies with growth. Do they do best? Do they get their strongest outperformance in a more shaky, possibly hostile macro backdrop where bonds are sucking some of the momentum out of the big tech as they have these last few weeks? So do those trades do better if rates at least stay elevated?
Sure, and we're frankly unsettled with the correlation between the long duration fixed income, called the long treasury, and large cap tech.
Okay.
We feel like that is a perverse relationship we're not very comfortable with. So we're absolutely looking for those that have stable margins. Look, Kimberly Clark is a perfect example. They have 4% price gains and actually gain 1% of volume. They didn't have to give up any volume in order to continue to pass through inflation that's becoming disinflationary at this point. So they had margin expansion without having to push too hard on their consumer. Those price gains that the market has gotten, at least from a consumer standpoint, over the past year, we feel like they're going to be very slow to give those back. And that is just explosive for margins as you go down the income statement. So we're really excited about those names, have that pricing power, and can pull those strings right here in this economic environment.
And you really answered the question there, which is not wanting to get stuck in that duration-linked trade between bonds and tech. So it does sound like that kind of reflects wanting to have a strategy here that can weather some of that volatility in the bond market.
Absolutely.
Great stuff. All right, so we're handing the baton and we're going to be able to keep going. It's just going to be a stumble, not a career ender. Because it was for me. I wasn't joking about the PTSD. All right, thank you very much for your time, Keith. Good stuff.
Thank you.
All right, Keith Buchanan, Portfolio Manager at Global Alt Investments, looking outside of tech to break away from the duration trade. And it sure is showing up today that it was dependent on bonds for the general market. But we'll watch some of those higher quality stocks. Philip Morris, some nice eyes there on a good pop post earnings. We're going to talk payments when we come back. A bull case on one of the most beaten down stocks in America. We'll be right back.
Beaten down
My dad
stocks.
was a hard worker.
Man,
He used to do
your dad was a hard worker. I remember your dad, we had 100 acres to bale. And he told us, he said, if I was able to bale all that hay, by the end of the day, we'd all get an ice cream. So your dad made $1,000 on that job, and he paid us 35 cents for a cone of ice cream. Well, your dad was smart. The time is now, Yoko says.
highs and higher lows in the chart. If we zoom in here, that $68 resistance level, that's a pretty important level I think we have to start paying attention to as we start to make our way up to that level. If we break out from that level, this really starts to potentially target initially 73 to the upside. That's my very, very short-term upside target. But really, you have to start looking at the low 100s. So we're talking about another 50, nearly 50, 60% rally from that breakout level that we're just about to break out from. So the potential here, I think, is quite strong, given the fact that PayPal is a stock that a lot of people have started to have overlooked over the past couple of years. But the fact that they operate a really strong payments business is worth a second look.
Seems like you're coming at this mostly from a technical perspective, or do you feel strong, confident about their earnings a week from today?
Not only do I feel strong about their earnings, but the fundamentals is really, I think, the bigger story here. I think technicals help you scan for these types of beaten down stocks. But if you look at the business itself, it's just downright cheap. It's trading at 12 times forward earnings. Despite the fact that analysts are still expecting this to grow at about 13-14% over the next few years, there are no stocks in this space that's trading at 12 times forward earnings. Operating margins are incredibly strong, and they're improving those operating margins. That comes in around 16%, which is pretty high for the payment space. This company has very little debt. They're clearly capable of covering their debt coverage. They're generating free cash flow. Everything that you look for in a solid business, yet it trades at 12 times earnings. So outright, incredibly cheap. So I think from an investing perspective, your downside risks to pick up something like PayPal at these types of valuations are incredibly low. So, this is really one where the technical and the fundamental thesis line up quite well. If you look at the industry average around 21 times forward earnings, apply that to next year's earnings, you're looking at about $105 stock, which just happens to align with my technical thesis, which, in that low 100s, which is the upside potential here for PayPal.
All right. So the trade then, you want to give it some time, you want to pick an expiration post earnings. Walk me through the structure. What do you see in options?
Yeah, I want to give myself plenty of time post earnings, because I think that if we get a good earnings, and even if we don't necessarily get the blowout earnings that you're looking for here, this is the one where I think, just from a fundamental perspective, investors will start paying attention to this more. So I do want to give myself plenty of time. So I'm going out to the June expiration to start off this trade, and I'm looking at buying just a simple call option, keeping it as simple as possible, the $65 call. Despite the fact that we have earnings coming up next week, these options are still quite cheap. You can spend about $3.75 to buy, that 2-month call option. This is a slightly out of the money call option, but given the earnings catalyst coming up, that's really kind of where I feel more comfortable buying. And this risks only $375 per contract. We're talking about 5% of the stock's value here that we're risking on earnings, but with unlimited upside potential going into June. Like I said, my upside is, well into the low 100s. So this is the type of trade that likely won't reach that level by June. But if we do get the move, it will likely be kind of making a nice way towards that 100 by then. And I would look at roll these June options to longer dated options and probably lock in some profits if this starts to rise from that level that we're currently trading at today, around that 64, 65 level.
All right, yeah, we're pretty close to the strike now. 65 call till June, so plenty of time for this December and make a recovery. Thanks, Tony. For the details on the trade, taking a stab at PayPal, chief strategist at Options Play. 3 bullish trades in our
Tesla's up 25.
Corner. We're looking at Ford and Intel alongside Affirm. Buyers across the board, optimism very clear as we head into the closing bell, half an hour away with an almost 2% gain in the Russell. We'll take a look at yesterday's big winner, Ford, which is a little slower today. Be right back.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely
every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Oliver.
GM had blowout earnings this quarter, and they're driving shares higher. Although revenue missed some estimates, earnings were above analyst expectations, which allowed the legacy car maker to boost its profit outlook. CEO Mary Barra said GM is seeing good early sales momentum for EVs, which is a win at a time where many other car makers have pumped the brakes on EV production to charge up the old standard internal combustion engine vehicles. But Barra said GM is benefiting from its scale, material cost, and mix improvements, and that the cost of battery cells came down significantly, providing a tailwind as the company accelerates.
$31 more minutes. I'll be right back. Oh. Gosh. Pop, snap.
Six 6.8% to 508,000 units during Q1. So maybe that's giving you a little bit of insight into what they're expecting as far as results go on their earnings report. Hybrid sales were up 77% year over year on sales of nearly 20,000. Overall hybrid sales in Q1 were up 42%. So that theme we've been talking about, where EV sales have been lagging, hybrid sales moving up. Ford's got a few models in there. So expectations probably getting elevated on the back of that GM news today. And we saw some call buyers in there in the April 26th weekly option. So just 3 days to expiration. You're going to capture tomorrow's earnings event on these. Trader bought over 25,000 of the 13 strike calls. Average debit of just 38 cents. It's a low price stock, not a lot of option premium in these out of the money calls. But that break even at 13.38 over the next 3 days, that's 3.5% above the current share price in there. Call volume today, about double normal daily average volume that we've seen over the last 5 trading sessions in there. So if you look at maybe the pullback in some of their investments, they've shut down some of their manufacturing. On the EV side, their Ford F-150 Lightning, they're putting that back into more of the hybrids and also the F-150 truck. If we see the same numbers out of Ford that we saw in GM as far as truck sales, it's most likely they're going to beat those earnings, and this trader's taking a bet that we're going to see some upside post-earnings.
Hey, tomorrow's story, though.
Yeah.
Not today.
Yeah.
Ford earnings coming out tomorrow. But okay, someone buying some upside.
Upside.
Ahead of the report.
Yeah.
How about Intel? As we get the chip makers bouncing back today, Intel slightly lower, still looking like the worst after that kind of fake participation through the last couple months of 2023. I mean, Intel's been hurting again this year. Bad.
Yeah, it's funny that you mentioned that.
Not bad. I mean, it went up, but it is kind of pulled back. Three black crows.
Hitting 6-month lows in today's session. You know, they just released the new the Gaudi, their artificial intelligence chips. the new lineup there. What type of competitive pressures are they going to put on NVIDIA and AMD moving into 2024? They've got the foundry side of their business, which cost them about $7 billion that they came out and announced that. So I don't know, is this a longer term story? Probably at this point. Shares are still down about 31% so far.
It's like it's the only story there is for Intel.
Yeah, and they've got, they got all the money from the CHIPS Act that's coming down the pipeline, loans.
Too much PC stuff, though. I mean, but there's no doubt that, boy, they still are so dominant in that market. I've been building a computer, and I mean, it's just, they are the absolute standard for CPUs still. The problem is that the market's not really interested in that story. It knows how to predict computer sales, personal device sales. It's pretty stable. They want to know, are you going to be selling $40,000, AI brains, which they're not yet.
Yeah, 150-pound, big units. I think if you looked at some of the March data that's already come out, notebook data up 44% month over month. But what does it tell you? Sales in February were below expectations. So you're seeing a big jump. Is that artificial intelligence arm where you need, a bigger, faster computer coming down the pipeline? Well, expectations are that PC and laptop sales are going to explode this year. And so far, we haven't seen it, but March data, good so far.
That's the problem, though, with the more cyclical name, is that even when you do have a good quarter in a cyclical business, it's oftentimes taking away from, a future quarter as people buy these things and hold on for a couple of years. All right, but look, somebody here with earnings right around the corner, Thursday is buying a pretty aggressive, like a 10% out of the money call.
Yeah,
almost.
But they gave themselves duration. This is out in the August cycle. They bought us over 7,000, the August 37 strike calls. Average debit at 215, so the break even just over $39 over the next 115 days. That's 14% above the current share price. Now, you did mention they've got earnings. Option market's pricing in about a plus or minus 6% move. But I think the key is you're giving yourself nearly 4 months in this position, or this trader is at this point. HSBC did come out and cut the price target today on Intel down to $37 from 44. You keep a hold rating on the shares also. So they didn't like the shares initially to begin with, but lowering those estimates going in this quarter. But I think the key with this unusual option activity is the fact that you're giving yourself an extra quarter also of results to see if those PC sales pick up and traction in the AI space.
All right. Well said. Last one, Affirm. Haven't talked about this stock much, but this is one of the high beta risk on off swingy trades. It's a fun one. So if people are buying calls in it, is that what they're doing?
Yeah, but this stock traded down to $29 in the pre-market on the fact that Walmart's majority-owned fintech startup One has begun offering buy now, pay later.
Okay, which everybody should, by the way, which is what I've always said about the bear case for this, is that everybody can do their own buy now, pay later.
They're rolling it out in some of their 4,600 stores here in the U.S. That's going to put them in direct competition with Affirm. But this was already known. They rolled this out at the end of 2022. So Dan Dolev from Mizuho came out with a note after this news came out. Stock initially fell, ramped back up. You can see there, based on the fact that, hey, this was already a known entity, and Walmart's only about 5% of Affirm's business at this point. They've got the Affirm card that's supposed to wash away maybe some of the losses that this might take place with. But at the same time, he still thinks that Affirm's a buy, a $65 price target.
Yeah, pretty bullish.
So that being
concerns
said,
around are overblown.
Everything flipped around. You thought puts were going to out-trade calls today. They're not. Calls are out-trading puts. Call volume is about double normal daily average volume that we've seen. April 26th, a weekly, really short-term positioning. Traders were buying over 2,000 of the 33 strike calls for an average debit of about 80 cents. So that break even, 33.80 over the next 3 days. It's only about 2.5% above the current share price in there. So not surprising. You saw this bounce back in the stock, and it wasn't only Mizuho out with a note. I believe Jefferies also came out with a note and kind of pushed back against this hurting Affirm as much as maybe the market initially thought. So some call buyers in here expecting more gains here for Affirm. It's up over 3% today.
All right. Okay. Good call from Mr. Dolev there on the risk of the competition being overblown. Love Dan, smart guy. So it seems like he got it right on that one today.
Yep.
We'll see long term though, because it's still well off the highs, not even close. But if people start buying calls in a firm, that stock starts buy the dipping intraday. Usually a pretty good sign of risk appetite coming in. All right, coming up, let's talk earnings season. Let's go into the numbers, get some detail on what to expect. Also a development from Amazon that has Instacart shares down, according to some. Seems a reasonable case for some selling in Instacart if Amazon's going to start delivering.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also,
and tailored specifically to our audience. We never take our eye off the ball, which
Are you
means
sure
we're
you want
always
to
ahead of our
exit?
peers.
No.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim. With robust charting and analysis tools, nearly endless customization, and up-to-the-minute news and insights. Trade brilliantly with Schwab.
Crude oil futures, the WTI contract holding up around $82, well off the spike high that we saw last week to near 88. The $6 a barrel decline we've seen in the WTI contract, a reflection of how tensions in the Middle East have eased. But with demand strong here in the U.S. and globally for that matter, prices at the pump remain elevated. The WTI this week has been teetering around the 50-day moving average, holding just above the longer-dated 200-day moving average, which is down around 78. To get more information on crude oil futures or to follow price activity more closely, check out the Future Show here on the Schwab Network weekdays at 8 a.m. Eastern.
Welcome back to Market On Close. 20 minutes till the bell and earnings. Stocks still looking in pretty good shape. Let's go to the NASDAQ and let's talk about the earnings season ahead of us, as well as some of the volatility in the last week with Mike Sokol, AVP of Account Management for the Market Intelligence Desk at NASDAQ. Mike, since last we spoke, markets got a little bit more volatile. We had some downside. So start by telling us the latest in the IPO Pulse, your guys' index that kind of measures the environment for IPOs. Has that gotten a little weaker?
Sure. Well, we only measure that. We assess it quarterly. It's a leading indicator. And so we publish it quarterly. We measure it monthly internally, so we don't have any new updates. I will say, though, even though things are a little rocky in the market, we had 5 IPOs last week, smaller ones, 3 already this week, and 1 to come on Thursday that's a little bigger. It's going to raise $300 million. So you're still getting those small.
But Sheridan, he's the original, the OG. Yeah, he's the OG. He's the
Come on, guys.
Go over well. We can try.
Public money.
SV, Texas Instruments, Telephone, STX, GD also have earnings. Tom says.
I do have a position in, what'd you say, Visa?
Yes, Visa.
Visa.
I always think of Verizon. I am short the...
No, you dummy. Can't be short it.
I am short the two... Oof. I'm short the 280 puts.
Ugh.
280 puts. Those are in the money.
I know. But we sold them at $8. They're $9.
Mm-hmm.
So I'm out $1. What would you do with that position?
That's all you have
Well,
on?
get the hell out of
That's
there.
it.
Wow, you got to thank Peter. I have mentioned to you 16 times between yesterday and today, but Peter reminded me again just now. So you got to thank Peter. Say thank you, Peter.
Thank you, Peter. Thank you, Peter.
$8 expected move in Visa. I think you're safe in selling the 80 call also. It would still keep your long delta, reduce it
What day,
about
Dips?
50-ish%, maybe a little bit more.
Monthly?
What do you think?
I'm going to sell the 72.5 call.
Maybe 17.
72.5 call.
77.5 call, I'm sorry.
Okay, it's just to be difficult. That right there, ladies and gentlemen.
Always clean
is
this, Jim?
Just to be difficult.
Phil, on the 77.5 call. Take your fill, Phil.
Hello?
I had a really good day. Today I had to put a little more
We
defense.
talked about how you trade a little bit less when you're having a good day.
Absolutely. Let's think about this for a second. All right, what do we got going on here?
In the money puts.
I'm just looking at my watch list to see if there's anything crazy. I mean, there's a lot of stocks up today. I'm looking at I have two watch lists. One, UNH is down.
Yeah, UNH is down 5.
That's the one he was
Boeing's
in.
down a little bit, so I'm assuming the Dow's. Well, the Dow's
FCX for earnings down a dollar, small. The Dow is up half as much as the rest of the market. So CVS, some oil-related stocks are lower, even though oil is higher. But that's just a few stocks. When you look at the other side, the flip side of the coin, you've got everything's up $30. SMCI up almost $50. AVGO up almost $30. NVIDIA up almost $30. Netflix up $25. Meta up $14. They're back, Sosnoff.
Tom's watching us.
Sharks crying.
Shark.
It's back, baby. It's back.
Why? Because Shark's crying?
Yes.
Is he a contrary indicator for you?
He's almost as good as a Sheridan, almost. But he hasn't been at the games as long as Scott. So he's got some time to evolve. He's even better than Sheridan.
Well, I'm looking at my watch list today, and it was awfully strong day. Like Coinbase up $9 with Bitcoin down in the day. That's weird. That's just a function of whatever.
Function of somebody trying to mess with you is what it is.
Yeah. Anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Let's see, what do we got going on tomorrow? So tomorrow is Wednesday, and tomorrow we have what?
You ain't saying much, guy.
Good stats for us ahead of this earnings season, and I appreciate the update on the landscape from a macro perspective. Mike Sokol joining us from the Market Intelligence Desk at NASDAQ. Let's go to our newsroom. Renita Young, our senior markets correspondent, with a developing story that seems to be bad for Instacart. Amazon gonna deliver again? For what kind of deal are we talking here, Renita?
Oh, we're talking about grocery delivery, and Amazon Fresh is pretty much coming for Instacart's market share they started to roll out 2 different grocery delivery services for Prime members. So if you already have a $14 a month or $139 a year Prime membership, for groceries, you can get the $9.99 membership, or if you're an EBT customer, a customer who uses the electronic benefits transfer, you can get that grocery delivery service for $4.99 a month over at Amazon Fresh. And that'll include unlimited delivery from Amazon Fresh, and Whole Foods orders deliveries of more than $35 will be included in that. It also includes 1-hour delivery windows at no extra cost and unlimited 30-minute pickup on orders of any size. And it'll also give you priority access to recurring reservations for a weekly grocery order. Maybe you need your produce just that fresh to come every week. But listen, if this sounds kind of familiar, it's because Amazon has formerly offered free delivery for groceries. Remember that, Oliver? Once upon a time, Prime members got free Amazon Fresh delivery and free Whole Foods delivery for orders more than $35. But back in 2021, Amazon actually added a $9.99 delivery charge for all Whole Foods orders, and it met with such opposition that it came with a lawsuit by some customers. And it also, the company, Amazon, has also raised and dropped grocery delivery fees, that threshold for however much it'll cost, if it'll cost free or more. They've dropped and raised that threshold several times over the past few years. Now, this is all, of course, hitting Instacart pretty badly today. Now, Instacart has become one of the biggest in the industry, even though Amazon Fresh is considered the OG in this situation. It's been delivering groceries since around 2007. Instacart has been delivering since 2012. But Instacart has a $99 a year membership, or $9.99 a month, and members can get the unlimited or free delivery on orders that are above $35. So it's not unlimited free delivery for any order, just that above $35. And they do actually still charge service fees of between 5 and 10%, but they also have perks like a 5% cash back perk, among others. So
sounds like they got cut. Sounds like Amazon just undercut them pretty clearly, right?
Absolutely.
I mean, why would, if you had the choice, plus you've got all the other benefits of Amazon too, I guess, right?
You do. You get all the other benefits of Amazon, i.e. having free delivery or reduced delivery for the other items that Amazon delivers from the storefronts, not storefronts, but
Amazon,
you know what I'm talking
look
about, from the locations, the warehouses. That's what the word is. All the other items that Amazon delivers. But you know what who I think is the winner in this situation? Actually, neither one of them. I think Uber One may win over all of them, because this subscription is $9.99 a month and annual $96. $0 delivery fee on all eligible food, groceries.
Uber bounced right off support.
Grocery stores. So it's not just Amazon Fresh or Whole Foods. And then they'll get 10% off of all of the eligible deliveries and pickup orders. Of course, member pricing on eligible Uber rides, and then partnerships with third parties that also offer a discounted membership. So I think out of all three, Amazon or Uber won really big, and it's in a category of its own, which is why the shares aren't even touched by this news.
Yeah, the connection to the other services from Uber definitely set it apart. One thing is clear is that right now we might be in a sort of race to the bottom situation. If Amazon's gonna make itself known, start throwing its weight around again, maybe it will benefit the customer and some other prices getting dropped too. We'll see.
For sure.
All right, thanks for the heads up. When we come back, got our big picture Schwab team standing by to take us into the bell. Be right back.
I was born on the south side of Chicago.
Sure were.
A long road, but now I'm working for Schwab.
Lucky dog. Yeah, we got 8 more minutes. 8 more minutes to go. 8 more minutes to go.
Schwab team in here to take us to the bell. We got a little less than 7 minutes left. Cooper Howard and Nate Peterson join me. Nate's Director of Derivatives Analysis, and Cooper is Director of Fixed Income Strategist at Schwab's Center for Financial Research. Afternoon, guys. Cooper, let's talk bonds first. The market today in stocks seems to be taking its cue from bonds, which are taking their cue from data this morning.
Yeah, so we did get the S&P PMIs out this morning. Showed a little bit on the contractionary side, so I think that's part of the reason why we saw a little bit of a pullback. So maybe a sign that the economy is cooling a little bit more than expected. Granted, it is only one data report, so I think that it's very difficult to kind of consider this a longer-term trend. But I think what's happening in the market is that traders are kind of paring back the timing and expectation of when the first Fed rate cut is going to occur. So what I think will also be interesting is seeing what occurs with PCE this Friday, and then even looking ahead to next week with next week's Fed meeting, Oliver.
Yeah, a blackout period, so we're not going to hear anything, but the market seems to be making its decisions data point by data point. Was that PMI for manufacturing going sub 50 a big deal in your mind, Cooper? Did it change anything in your models and your calculations?
You know, I don't really think so, and I think that that's been one of the interesting things about this kind of story since the beginning of the year, is that the narrative with the Fed really hasn't changed. They've preached patience, so even though they are on a blackout period, I would expect if they were to come out today, they'd probably continue to preach patience. It's the market that's really kind of reset their expectations. We came into the year expecting 6, 7 rate cuts. We're now down to probably expectations of 2 rate cuts this year. So really what the Fed has been saying versus what the market has been interpreting it has been at odds, and the Fed really hasn't been kind of preaching a different story. They've continued to preach patience. So looking ahead to next week, we don't expect a rate cut, obviously, but I do expect that they will probably try to set the path out towards that potential rate cut, and that might be a path of patience again. So I think that that's been the key word coming from the Fed recently.
All right. Nate, what do you make of stock's reaction to it today? It seemed pretty clear as soon as that data came out. Russell ran with bonds, and we've been in good shape since.
Yeah, it's primarily a technically oversold bounce, looking for an excuse to bounce, basically. That's the way that I interpret it. Because, look, on the 10-year, we're 5 basis points away from our year-to-date high. We're down at 4.6. So it's not like this huge move in the 10-year. Having said that, the VIX, it is kind of encouraging to see that VIX kind of pull back. That got up to 20 or so. So it's nice to see that move kind of confirm it. You know, big week for tech, obviously. I think we're kind of, looking at the AI story. Hasn't been great. You know, we saw a super microcomputer down $200 because they didn't raise guidance. Taiwan Semi beat, but then sold off 4%. ASML, weak guidance. Cadence Design Systems last night, not good guidance there. So we need Microsoft, Alphabet, and these guys to show us that this AI story still has traction, because it's losing some of its luster, I feel like, for this earnings season. So Copilot Pro, what's going on there? Gemini, are they signing up? What are some growth stories around AI when we get into the application of it? I think that would be key. That could begin to drive that. But as ASML said, and yes, they do sell $200 million, semiconductor manufacturing machines, but they said that, some of this weak spend from corporations because of geopolitical uncertainty and higher rates. Well, that wasn't the narrative back in February. They said, NVIDIA said we're sold out of chips. We're in early innings. Demand is there, and it's going to be here for several quarters. If we're starting to see that that's not the case, I'm a little bit concerned about technology.
I think it's a very good point to focus on the services side of it. The hardware is not a mystery. We know those numbers are going to come in big. Obviously, it would be nice to see them come in even bigger, but we've had that trade, and maybe it's got more to it. What has been holding up better than hardware in the last 2 weeks is Meta, is Microsoft, is Alphabet, are those companies that are providing services. So basically a brass tacks kind of, what are we doing? Where's our utility with all of the chips that we bought? That's this quarter.
I think so. It might be a little bit early. I mean, there's still kind of, Google has, a 2-month free offer. Copilot Pro, you can do that for a month free. What I'd like to see is, if I sign up for one of these services, what's the stickiness? because maybe there's some novelty to it that you can get people to sign up or to try it, and they can utilize it and be a little bit more productive for a month. But is this something that we need from a month-to-month basis, where this subscription is going to be really sticky, or is this more of a novelty? Because the main push for this AI investment theme is basically productivity. So if you can buy me time and I pay $20 a month and you're going to save me more than $20, then it begins to tie together all these data points back to the investment cycle where those...
All right. One of them kind of days, real good day. Started early too soon, for I should have probably thought about my first trade. But I got out of it real fast. The rest of them were okay. Just took my time. SPY almost made it back to the VWAP. Had that bounce on AMD this morning that we called out. 3 black crows. Then she created a head and shoulders, and then boom. I've really got to get disciplined on waiting for the pattern. I think I've got the beach trade down, but I want to get that pattern down and get that bottom and try to run it up as high as I can. Today I got away with it. So we're going to find out about Tesla here. Waiting earnings.
Chubb and many others that
Visa,
we will be monitoring.
Matt,
As we await
and
those
CB,
earnings, let's
Chubb.
begin our market panel. Vital Knowledge founder Adam Crisafulli and CNBC senior markets commentator Mike Santoli. Adam, I'll go to you first because it really seems like it was earnings that were driving the narrative as we did see this rebound in the equity markets today. You also saw yields come off a bit here. Is this enough? Can we say that the pullback has happened and now we are turning the corner again?
Yeah, I think you saw in the last several days, the early morning dive lower Friday before the open off of the Israel strike in Iran. I think that was kind of a sustainable chop right now. And in the last couple of days, we got some dovish data this morning with the flash PMIs that helped bring yields a little bit off their highs. And then you had a bunch of encouraging earnings from across a variety of industries, GM, GE, Pfizer. There were just a bunch of updates
All but
from
the banks.
areas of the economy that were encouraging. I think the combination of all that, you unwound a lot of the technical excesses in the last several weeks in the sell-off. All that helped to drive this rebound, and it probably has some more legs to go. I don't think we'll be setting fresh highs in the S&P in the immediate term, but it definitely, the price action, the technical landscape does feel a lot better than it did, even just in the middle of last week.
Yeah, Mike Santoli, I mean, we can talk about the fact that every sector was in the green today except for materials, but it was big tech leading the charge. This is a big week for big tech. It starts here in the next couple of minutes with Tesla. Have we seen the bar lowered enough that earnings are going to springboard past it?
Well, I think you did on Friday. You see the bar lowered enough for most of these names. I think Spotify today was a good example of that, just getting back all of its recent losses on a pretty decent number.
Here they go.
Blowout. So, yeah, I think so. I mean, to some degree, it's muscle memory. I'm with Adam in saying a V bottom right back to the
Come on, quit talking.
market or in the NASDAQ. Probably not the likeliest scenario, but so far it's encouraging the market's been able to find its footing.
This guy's got a
All right,
mouth.
Mike, hold tight. We got Texas Instruments earnings out. The stock is higher in overtime. Christina Partsinevelos has the number. Christina.
Oh, the stock's higher because EPS came in at $1.20, which is higher than what the street anticipated on revenues of $3.66 billion. Also slightly higher than the street anticipated. What we care about is Q2 guidance. The company did post a range that fell in line with estimates. There was one line that did stand out. Revenue decreased 16% from the same quarter a year ago, 10% sequentially, as revenue declined across all end markets. And we also heard from TSMC. But nonetheless, you can see shares are popping over 6% right now on the top and bottom line beat. And so far, Q2 revenue guidance that fell in line. Guys?
All right, Christina, Thank you. Adam Crisafulli, I am wondering right now, Texas Instruments aside for a moment, though it is interesting, especially since it doesn't seem like this is a blowout, but the stock's still moving higher, which has been a bit unusual for some of the results lately. How much does Tesla still matter, either to the big tech trade or to the growth trade right now? I mean, it matters, of course, to like ARK's main fund for, I'm sorry, Tesla's out. Is that what I'm hearing? And we are going through it. So as we wait for those numbers, how much does this matter even beyond Tesla, Adam?
So I think with Tesla, what's really been happening is you've obviously had weeks of bad news. You've had poor deliveries, you've had job cuts. I think really what's occurring is kind of the market's perception of this company is shifting away from it being a tech giant, comparable to a Google or a Meta, and more towards a traditional oil firm. And I think that's kind of responsible for a lot of the poor price action that you've seen. And so it will be interesting, not so much in the Q1 numbers, but on the call tonight, I think there'll be an effort to kind of reshift the narrative back to looking at Tesla through the lens of technology. But I think that's kind of the real battle right now in the market. What is Tesla? Defining it. Is it a tech company with software revenue streams and services, or is it just an auto company with auto-like margins and auto-like growth? And I think that's kind of the real dilemma now that the market's trying to grapple with.
Mike Santoli, I'm really eager to hear what these numbers are, because the stock right now is up more than 7.5% in overtime. And of course, this is just an initial reaction. Put that into context for us, because so much is going to depend on what the language is on the conference call. How much does that matter for Tesla in particular, since so many are watching this stock so closely?
Yeah, I mean, any sort of, I guess, volume guidance, deliveries guidance that has some credence to it, because the story, has changed from we're supply constrained, we sell every car we can make, to obviously not being able to have enough demand to keep your margins and prices up. Stock's down 40% year to date coming into this. So obviously, we definitely had a stampede out of it. So we'll see if it was less bad than maybe people were bracing for in terms of the actual numbers. I'm on the side of Tesla. Kind of was never a bellwether for much, except for a certain category of investor risk appetite, where you had this sort of go, we're just going to pay any premium.
No, yeah, right. Yak, yak, yak. Just
here. I mean, looking at GM this morning.
This is going to shit all their britches. They've been bashing Tesla forever. They're going to go, I mean, they won't. They're calling it to 120, 113, 110. I'm going, no, ain't going to happen. Getting rid of that Rick Santelli guy, or Mike, whatever his name is.
Certainly not nearly what it is with a Ford or a GM, but you had a lot of big industrial companies today. Is it UPS, GM, GE, all of which had relatively sanguine things to say about the underlying economy, and so it's certainly encouraging.
Tesla. Phil LeBeau has the numbers for us. Phil, there's a lot here in the summary.
Morgan, it's a miss on the top and the bottom line for Tesla. We're going to start crunching the numbers within the numbers, but let me give you the top and the bottom line. First of all, bottom line, they earned 45 cents a share in the first quarter. The street was expecting 51 cents a share, so a miss by 6 cents a share.
No, you missed by 6 cents.
3 billion, light of estimates, which were at 22.15 billion. So, and the top and the bottom line, you've got a miss there. And then one other note regarding guidance on deliveries for 2024.
I'm not going for it.
We were looking for a number. We have not come across one yet, except
I don't know what gives them the authority to give the estimates and then say the company's wrong. Why can't they be wrong? I'd really like to know how they come up with how that happens.
For Tesla, we're going to dive into the numbers, look at things like automotive gross margins, excluding credits, etc., and we'll have that for you in just a bit.
So I hate to ask a question, Phil, that has no answer that a reporter can give, but have you seen anything in this report yet that would explain why the stock spiked up almost 8% initially? Now it's down around 3%. Maybe it's just algorithms out there or some initial anything?
Not yet. Not yet, John. Have not come across something. And there may be something within these numbers that you, when you start crunching them and going through it, and you say, okay, not as bad as we were expecting. Or when you look at the energy storage business, maybe there's some indication of some news in there.
Or you were wrong with your estimates, big time, because you're very biased company.
We know we got 31 pages in this report to go through, so Phil, we'll let you get back to it. In the meantime, just taking a look, even at page 1 here, John, I mean, they're talking about increased AI training compute by more than 130% in Q1, record energy storage deployment, produced over 1,000 Cybertrucks. We don't really talk very much about Cybertrucks in a single week in April, and talking again about the fact that the future is not only electric, but quote unquote also autonomous, perhaps teasing ahead to that robotaxi announcement we get in August.
Yeah.
I know, you're very skeptical about
I'm just saying,
this.
be careful out there. It's a stock that's being watched very closely. It was initially up like 8, then it was just down around 2.5 a bit. Now it's up at 4. It's going to be a long afternoon.
Let's turn them off. I said that the pullback that we've had has been extensive, which, you know, is uncommon for Tesla. And when you have a pullback like that, you know, I've said it once, I'll say it again. I think it's priced in. Their estimates, I don't understand how they get the authority of being the street and being the so-called estimate maker here. I would rather go with Tesla's estimates, and then, but have an opposing team that's biased against Tesla. So we did hit the 63, and that's what we got to try to break tomorrow. And we got to try to hold still the 143.75 or higher, the 9, maybe the 21. Right around 148. So I'm going to get on out of here. I wish everybody a great day, and thanks everybody. Have a great day. We got to break the 63. That's a good point, Francis. I don't like swinging either, man. I've probably swung 4 stocks all year long. I just ain't going to do it. Not in this kind of market. It's so easy to catch the knives and go off on them. I mean, it's a beautiful trade right now. Hopefully I'm up. I just got 1 contract. I don't think that 24-hour swing thing's a good idea. I really don't. That will create a lot of lunatics. A lot of divorces. Honey, get to bed. No, I'm trading stocks. Leave me alone. Honey, we ain't had sex for 2 weeks. You had done damn stocks. I'm getting a divorce. You'd wake up at 2 in the morning. Okay, well, I'm out of here. Message Magnificent. Tell him to get back here. We'll catch y'all later.